$94 uranium, or is it $110 uranium? There's a prediction in there from Citibank that we'll talk about here, Justin. We will also have to talk about buying the dip. I mean, there's been a dip. I want to know if you are or not buying the dip of the dip of the dip, like those dips. We have a bunch of other related things to talk about uranium. We have to talk about whatever's happening in the spot market, but also the uranium enrichment as well as conversion markets. I've seen some stuff on Urenco's report. Encore Energy has been buying in the spot market as well, I think. We'll talk about that as well. A bunch of other things. And then I have two nickel companies on the CEO barbecue, as well as one uranium company that's fallen a lot. And there's some hard questions that need to be asked there. So, again, loads to talk about in this episode of Transition Talks. And Justin, I'd initially actually intended on asking you why my uranium portfolio is still in the red. I was going to blame you for it because obviously it is single-handedly your fault. But it seems like the dip is what? Is it? I don't know. I don't want to jinx it, but it seems like it might be over. I mean, what strong retail sales today, a bunch of other tailwinds geopolitically, macroeconomically, rate cuts, yada, yada, yada. So what? Talk to me. Are we out of the woods yet?
That's a tough question to ask or to answer, I should say. All I can look at is historical evidence of bottoming periods of time for the sector since I've been following it. And there's three factors that I've been watching that have all coalesced over the past, let's say, 3 weeks, and especially during this washout with the yen carry unwind, sort of liquidity event that was 2 weeks ago today, for a period of 3 days in the market. That was pretty brutal to everything. But uranium had a little bit of extra downside fuel to it due to the Kazatomprom news that happened the night before this liquidity event started. And that was a slight increase in production. And we believe that's primarily coming from one of their projects. It's a Russian joint venture, which we can get into a little bit further. Are we out of the woods? So what am I looking at? Three things that have happened simultaneously. One, very large discount to NAV for a SPUT. So this brought Physical Uranium Trust trading at greater than a 15% discount to its net asset value. Every single time that has happened, that has been either the bottom or a few percentage points in a few weeks off of an actual bottom for the sector, with these cyclical pullbacks that are happening in an overall secular uptrend. So SPUTs, large discount to NAV. The second would be very, very low sentiment. And while it's difficult to directly track that, you can track that anecdotally via YouTube comments, via Twitter /X comments, which tend to get very, very negative. Not just the comments, but actual public proclamations of capitulation, saying F this, I'm out, I can't take it anymore, that type of thing. And we saw a little bit of that happen, over the last, but most of the really loud negative people are persistently loud and negative, and I have them blocked anyways. So I've had a number of messages saying, hey, Justin, I really don't like what I'm seeing, people saying all this bad stuff about you. It's like, oh, I didn't even see it. So I just tend to tune it all out and focus on what we're working on, which is probably good for my general mental health. But
Yes.
yeah, I think one of the, and I shouldn't laugh because it's been a difficult period, okay, and I don't enjoy it. Holding through drawdowns is difficult if you have dry powder to expend, which I did, and I did, expand on my long positions in the past couple of weeks. Then, as a contrarian, that makes me very happy because I'm still very bullish long term fundamentally for the sector. But it doesn't feel good to weather these drawdowns, and so I've experienced that many, many times before, and most recently, along with everybody else that's long this sector and is going through this. So I get it. It's difficult, and it's been difficult as well. But there was a post from a friend of mine on Twitter that basically mentioned that it was a very good sign to see the long-term price of uranium rising during this consolidation period where the equities are languishing, where the volumes in the term market are very, very low, yet the price is rising. And he's absolutely right. And the top comment for that post was, F you. So, it wasn't even related to like the sector drawdown of the equities. It was just making a statement about the physical market. And that was the top comment. And I literally laughed out loud at that and sent the guy a message. It's like, hey man, this is too funny. Okay, so we have SPUD at a big discount,
That's right.
public proclamations of capitulation, and the daily relative strength falling off the screen. So if you combine all of those things, very, below 30 RSI in the daily charts, with a big discount to NAV for SPUT, with public hand wringing, and you have, historically speaking, every single time in the past 5 years, with one exception, which was the COVID crash, was the bottom or a couple of, less than 5% off of the bottom in that downturn. Now, I'm not trying to call a bottom here because I think there's a lot of potential for volatility in markets and just in the world in the coming months. And I've been stating this over and over to our membership, and even leading up to this liquidity event we just experienced for the past about 8 or 9 weeks on a weekly basis. We do what's called a weekly watch list I put out every Sunday before the Australian market opens, where I go over the charts with very simple technical analysis. I never proclaim to have a crystal ball, and I don't use technical analysis to try to predict the future. It's to try to gauge sentiment and gauge where we are at more than anything. So I share the charts and I share kind of some snippets of what I'm expecting for the coming week, what happened the previous week, and what's going on in the physical market, what's going on in broader markets. Usually there's sound bites just to kind of like, how am I positioning? How am I expecting to trade going forward? So for the past 2.5 months, what I've been saying is the summer is going to present a bottoming opportunity in uranium. Make sure you have a cash position on hand to take advantage of it. And a lot of our membership did that, had a lot of thank you emails and messages from that recommendation. And turns out that was a good thing, despite the fact that holding core positioning in our portfolio for uranium and some other sectors as in a diversified portfolio, making sure I had some cash on hand for what I expected would be a bottom. Why did I expect that? It's a very strong seasonal play. And looking at how dead the physical market has been meant that there was no visible urgency in the physical market in June following the World Nuclear Fuel Markets Conference into July. Even now, it's still very, very quiet in physical markets. So that means we could get whipsawed around with the broad markets, and we did. So we had some cash. We recommended having some cash going into this, and that paid off. So coming back to the three elements, the large discount to NAV, the RSI falling off the screen, and public very low sentiment proclamations. So the only time that hasn't marked a low in a cyclical pullback was COVID, which was, the liquidity event of the past 10 years across markets. And that was the only time. So can we have another COVID-like crash in the next few months? Absolutely, it's possible. Do I think it's going to happen? I have no idea. I think the potential for volatility is very ripe. With all of that said, all of the signs are pointing towards the next move being higher as soon as we see meaningful volume and purchasing needs come into both the term market and the spot market. And the term market is starting to see some picked up activity. It's a very, very good sign that we've had extremely low volume trading in the spot and term market, yet the price is firm in the spot market and the price is rising in the term market. I can't stress this enough. It's a very, very important tell for any commodity when the buying interest vanishes and the price rises. That doesn't happen unless you have a structurally undersupplied market and an expectation on behalf of the buyers and the sellers that the next move is higher. That's what we're expecting for sort of the balance of the year. It could kick off tomorrow. It could be next week. It could be next month. We think the latter half of Q3, especially into Q4, is going to be very strong.
But in conclusion, Justin bought the dip. That's the only thing I heard, and then I stopped listening.
I did.
I'm kidding, but you did. So you bought the dip.
I did.
Okay.
Yeah.
Any specific focuses of the purchases? Like specific, you don't have to tell me names, of course, but specific segments of the sector, specific jurisdictions or market cap range? What are you focusing on?
Sure. The really positive thing about liquidity events is that everything gets sold. So in a general, when markets aren't high volatility, when they're generally moving up, you typically have the wheat from the chaff separated, right? You have the really high quality, highly liquid stocks generally outperform, especially in the first innings of a long-term secular bull market, let's say. And so you've had the Camicos and the next gens and companies like that that have outperformed the sector, not, marginally, in some cases vastly, depending on what you're comparing it to. But when you have an event like this where everything gets sold, even the best companies that have been the outperforming companies that are generally safer, generally more liquid, they get thrown out. The baby gets thrown out with the bathwater. So for me, on that type of event, I mean, I personally was looking at, options plays on some of these very large cap, generally outperforming companies. So that's where I levered up, but I also just incrementally and marginally added to all of my longs across our focus list portfolio recommendations. So I have kind of two accounts. I've got my long and strong account where I don't really touch that much. I generally buy and hold there. I've got another account where I trade a bit more. I trade options a bit more. So I got and I have a very, very high risk tolerance. So none of this is recommendations. I don't buy short-term calls or puts ever. I usually do spreads. I usually go out in the future, give myself a little bit of theta. So with that, that's what I was looking at during that time. And everything was on sale, highly liquid, highly liquid. So buy when it's easy to buy, sell when it's easy to sell. And this was a period where it was very, very easy to buy. With all of that said, Antonio, I don't know if that was the bottom in this pullback. I think a lot of it is going to have to do with the timing of when we start to see the spot price move relative to what the broad market is doing. So if the broad market washes out again and the spot market's still sitting there flat with, I mean, not a single pound is traded in the spot market in the last 5 trading days. So that's where we're at in the spot market. If the spot market starts to move and we see some strength and some funds flow, some volume and liquidity come back into the uranium market, which we will, I just don't know if it's next week or next month, right? But it's going to happen. It has to happen because utilities have to buy. So when that happens, that could help to protect us from some broad market event. But when the sector is dead quiet and the broad market swan dives, we tend to go down with it.
That's something I've been thinking about a lot lately, and I have a podcast planned in the future to talk to someone who kind of specializes in portfolio management specifically. But like I don't have unlimited capital. I mean, a big secret, right? But and when I would want to buy the dip and then the dip of the dip and then the dip of the dip, right? I want to buy all of them, but I don't have unlimited capital. So how do you don't have unlimited capital, unfortunately, either. But how do you manage that when you see a dip that is as aggressive as this one? Do you buy, like, do you put 50% of your cash position back into the market? Do you leave someone, like, how do you deal with that?
I deployed a decent amount of my cash position. I also trimmed down some positioning in. So I have a pretty diversified portfolio. It's not just uranium. I own more uranium than anything else, but I also own some offshore oil. I also own some precious metals, some various other stocks. I want to be diversified, right? Just capital protection 101. So when something like this happens, if I have extra strong conviction about buying something at any particular time, what I'll often do is trim down some positions that are lower conviction. And so that's what I did during this washout. I had some positions I was flat on or slightly up or slightly down, and in something that's there for general diversification, that's not necessarily a super high conviction play. And I'll peel a little bit off of there and put it into something that is high conviction. So if I have a very high conviction long for let's say a 3 to 5 year period going into the future, if that goes on an extreme sale during some type of event that aligns with the elements I just mentioned, terrible sentiment, RSI 25, large discount to NAV for spot, the whole uranium space went on sale. And in particular, in my opinion, there were some extreme sales that were offered that it was hard for me to pass up. So I deployed some of my cash, still have some cash, but I also just generally kind of trim some low conviction stuff in my portfolio to add to my high conviction longs.
And that's company specific. There's no framework where you say, oh, I'm getting out of the very small caps, adding to the large caps necessarily just because of the market cap, but it's company specific too, I assume.
Sure. Yeah. I mean, what I didn't trim anything in the uranium space. I trimmed some of my other diversified longs in other sectors that were not getting hit as hard. So that's uranium, in my estimation, during that event got hit way harder than was justified. And part of that, like I mentioned, had to do with the Kazatomprom news from the evening before. But yes, it's company specific. So I've got obviously my already long position in the uranium sector watch list of things I'm looking at in and out of the sector. And when something like this happens, I definitely deployed some cash as well as just trimming low conviction, adding to high conviction.
Are you
Yeah.
still shorting the broad market? I remember you had it as a hedge on. You had an options play, I believe, on what QQQ or something along those lines.
I was short the broad market leading up to the yen unwind crash, let's call it. I wasn't short during that crash.
Classic.
So shorting is really hard. I do have a broad market short on right now. Of course, the market gaps up. It's up what, almost 2% today. So that one's hurting a little bit, but it's a really small position. It's just something to buffer any downside moves a little bit. It's not a high conviction short because there's so many there's so many elements to broad market fundamentals that I not only can I not speak on with very high conviction, but are just so hard to predict. I mean,
Hmm.
it's election year. There's a bunch of weird stuff happening politically in the United States that I'd rather not get into. There's war drums beating in the Middle East and in Ukraine. There's a number of things. I have no idea how much of this carry unwind is through, how much more borrowed yen has to cover. I don't know. I don't know. And if rates drop in September, that could squeeze a little bit more. It's just so hard to predict, but all I know is I have a general gut feeling that things are unstable in the world right now,
Hmm.
which doesn't give me the warm and fuzzies for just being, openly long everything blindly. I want to maintain some cash no matter how convicted I am on anything and potentially move into short. So I do have a small short position on the market right now to answer your
Hmm.
question more
Yeah.
concisely. Yeah.
But what you said there was also important. Buy what's easy. Buy when it's easy to buy. Sell when it's easy to sell. Um, so that's kind of the old school contrarian mantra, if you will. But I don't know, man. I saw Citibank just upping their uranium price target on uranium to $94. By the way, by the end of 2024 is what they expect. They say it will average $110 in 2025. And I'm getting kind of worried when, as an aspiring contrarian myself, I see generalists getting bullish on uranium. How do you feel about that?
Citi actually amongst the bank coverage of the sector has done a decent job in their last handful of reports. So I think that they have their finger on the pulse better than some others. I think it's pretty obvious to make that kind of call. It's an easier call than making a call on the equities, in my opinion, because the equities the mining stocks are still stocks, and as you saw a couple weeks back, everything got sold. Whatever you own got sold, right? If you wanted to de-risk, you sold what you had, and that's what happened. But the physical market is easier. And it's easier because we can actually model out demand, which I'm sure Citi has done, either that or they're taking information from UXC or the WNA, or whoever it might be. You can model out the buying that needs to happen, the demand picture relatively accurately. You have to make some assumptions. You have to make assumptions on operational and transactional enrichment tails. You have to make assumptions on life extensions or not. You have to make assumptions on the construction timeframes for reactors that have started construction. You have to make assumptions on planned reactors that haven't put a shovel in the ground yet. When are those going to be operating? But with all of that said, you can still see clearly the operational reactors of the world right now. How many are operating? Make a tails assumption. That gives you a number. How many are under construction? When are they going to hit the grid? That gives you a number. How many are going to be shut down? That's an assumption you have to make. It's pretty easy to assume that Spain is probably going to shut down their reactors. Taiwan is looking like they're going to shut down their reactors, their last reactors. I think they have two still operational, one or two. But you also can probably make a pretty easy assumption that all of the reactors set to shut down in the United States in the next years are probably going to be life extended. So those kind of assumptions you have to bake in. The demand picture, it's pretty easy. It's time consuming, it's arduous, but it's easy to kick out a general number of where the demand should be and is going to be in the next 5 to 10 years. The supply picture, honestly, that's even easier. There's not that many mines that are actually producing in the world right now, and there's only a handful that are under development as well. So you can see the supply and demand picture easier for uranium than you can pretty much any other commodity sector. And so that gives us high conviction in addition to the obvious evidence of the physical market pricing. What has happened across the fuel cycle in the last 2 to 3 years? Enrichment and conversion have all, not only just UF6 and EUP, but the actual services, they're all at multi-year, if not all-time highs. U308 doubled from July to January. It pulled back to 80. We're at a substantially higher low. So what are we watching this year? The physical market has been very, very quiet, with the exception of January. There was a little spate of buying in April, but for the most part, it's been very quiet. July was the slowest month for the spot market in over a decade. We've barely traded any pounds. So in this extremely low volume environment, what has happened to the price? When the buyers are largely on strike, the price has been stable. And in fact, the term price in the long-term market, 38 million pounds secured officially, according to UXC, year to date. That is very, very low. That's less than 30% of replacement rate. The price is rising. The long-term price is up 16%, and it's up about 20% according to Trade Tech year to date. So the term price is rising on historically low volumes traded. It's a no-brainer. That's very, very clear what that means. It means the market is undersupplied. It means that buyers and sellers are essentially in agreement that the price is going to head higher, because when there's a buyer strike, it's firm and rising. What happens when there's not? 2 weeks ago, Cameco's conference call, they dictated that their JV Inkai project in Kazakhstan is down. Their production is down over 18% year over year for the first half of the year. That day, after that news came out, there was some buying in the spot market. 700,000 or 800,000 pounds traded that day. What happened to the price? Went up $4.50 just that day. Of course, it reversed the next day with news that Kazakhstan is increasing their production. We can get into that if you want to. But point being, minimal volume coming in and buying pressure is moving the price. So once we get through this period of consolidation with utilities largely stepping out due to waiting out this big price rise environment to see where the price settles out, due to Russian sanctions and sorting out the waivers process has largely kept the US out of the long-term market, with small exceptions, small volume exceptions, and just general uncertainty around Russian sanctions and this pricing environment has left utilities sitting out to see where things settle out. Well, this is where they've settled out. So you can't really get much lower volume than what we're seeing right now. And the fact that the price is firm and rising is an extremely, extremely positive signal. And we expect as soon as there's buying pressure coming back in this market, which we think is going to happen relatively soon here, we're going to see the price respond. And everybody who threw in the towel because the price isn't moving is probably going to want to buy back in because, oh, right, we are still in a bull market, and we are.
Well, part of that buying I find interesting in this city report as well. They suggest that the planned restarts would represent the most meaningful short-term increase in uranium requirements. They don't call it spot buying; they just call it uranium requirements. So, is it spot? Is it not spot? I don't know. But is that really that tangible? Like the restarts that we're seeing, or the reactor life extensions, is that going to be a meaningful impact in the short term?
Yes, I think that's highly accurate, and there's plenty of evidence for that. One large piece of evidence was just last year. So towards the end of 2022 is when we had news that California was intending to life extend Diablo Canyon, both reactors at Diablo Canyon, for a 5-year period. As soon as that was official, PG&E came into the market with a relatively large RFP. That was one of the two things that started to tighten and move the market last year. So the other one was a large RFP from the Koreans. Both of those things happened Q2 into Q3 of last year, leading right up to this big price move. So life extensions and restarts do represent near-term needs. So if you're a utility and you're operating a reactor, and you know your reactor is going to be operating for the next 20 years, you're gonna be fully covered for the next couple of years, partially covered 3, 4 years out, and probably uncovered 5, 6, 7 years out and beyond, right? You're just going to buy what you need to buy when you need to buy it, with a little bit of time buffer to make sure that you can spread out your risk by buying from multiple sources, buy across the fuel cycle, et cetera, et cetera. So these are all things that happen on behalf of nuclear fuel buyers for utilities. If you life extend a reactor, you're going to apply for that first. In the United States, that would be with the NRC. So if you expect your reactor to shut in 2030, you're going to put in that application now-ish so that you can have plenty of line of sight on what you need to do according to the NRC. Maybe the NRC is going to examine the reactor and dictate some uprates or some fixes that need to be made to the reactor in order for them to approve the extension. So any work that needs to be done on the reactor, but also give yourself time to cover off and get your fuel needs sorted before the reactor is life extended. Because if you're expecting it to close in 5 years, you're not going to cover off beyond that, right? Soon as, and there's a dozen reactors with applications in right now in the United States for life extensions, just in the US. So life extensions, and same thing with restarts. Palisades is looking to restart in 2025, by the end of 2025. So that's a big deal, and that will represent near-term needs, because Holtec is not sitting on the next couple of core loads for the Palisades reactor. They're going to have to go out and source it. So absolutely, City is correct. Restarts and life extensions represent near-term demand, in addition to any uncovered utilities. But like I said, utilities that have line of sight on the long-term operation of their facilities are generally more covered than a utility that's expecting their reactor to shut down in the next 5-ish years.
What is the impact going to be? Maybe not in terms of price target, but how many more pounds are we talking? How many unexpected pounds are going to have to be found in the market?
That's a good question. Off the top of my head, I think there's north of 10 or 12 gigawatts that are supposed to come offline in the next 10 years in the United States that are probably going to be life extended. So if we say, let's just say 10 gigawatts that would have come offline that are to be life extended, need to cover in the next 10 years, plus the restart. Let's just go best case scenario. They restart Palisades, Duane Arnold, and 3 Mile Island, Unit 1. All three of those get restarted in addition to 10 gigawatts. We're looking at 12 gigawatts. That's 6 million pounds per year that they would need to cover.
Okay.
That'll get
extra.
spread.
No.
Yeah, that's just marginal on top of what you can already model out for existing operational reactors and anything coming online, in addition to the 30 reactors that China is building right now.
City also mentions, by the way, on here, and where I'm going with this is basically asking, what do you think is going to have the most effect? Because you say, well, these restarts and reactor life extensions are going to have a large effect on the demand for uranium, but what's going to have the most effect, and what should we be paying attention to the most? And so one of these things, or well, quite literally, they bring it up here. I'm going to quote it. They say the pace of uranium mine restarts and development of new mines globally would play a larger role in uranium price determination. The supply is projected to grow by 17 million pounds this year, 14 million pounds in 2025, 12 million pounds in 2026. I think this is where you might start disagreeing with them. But yeah, what do you make of this?
Yeah, that assumption is assuming Kazakhstan's 100% subsoil for 2025.
Not going to happen.
No, it's not going to happen. This year, those numbers are probably ballpark correct because we had MacArthur get to full production, or expected full production, right? Last year, they produced a few million pounds. This year, they're expecting to hit their nameplate, which is 18. So that makes sense. Plus, Langer Heinrich restarted. Their production is missing, but it's there. You have marginal production coming out of the ISR restarts, like Honeymoon and some stuff in the United States. Uzbeks are producing a little bit more, maybe a little bit more out of BHP, Olympic Dam. But the big one is Kazakhstan, right? They're the 800-pound gorilla in the room, and their ramping right now is primarily this large joint venture deposit with Russia. That's the Budanovskoye 6 and 7. And they were expecting to produce, I think it was 2,500 tons this year. We think they're going to produce less than 1,000 tons from Budnovskoye. But the anecdotal evidence, until we have their financials next week, which will dictate individual project production numbers, Cameco is off 18%, joint venture, Inkai, 18% year over year. The Chinese joint venture from CNNC, one of their projects, was up 1 or 2% year over year. And on a 100% basis, they're up 5-ish% year over year. What does that mean? It means potentially that sulfuric acid is being prioritized for the Chinese and the Russian projects, in addition to potentially other elements, right? Which would be skilled labor, drill rigs, things like that. So this Budnovskoye deposit, in our estimation, okay, look, Kazatomprom is still state-owned. They still have a large influence from Russia. They get most of their sulfuric acid imports come from Russia. Without going deep into the geopolitical element of this, Russia has a big influence. So this joint venture, 49% Rosatom, Budnovskoye, represents a very, very important, crucial asset for Russia. Russia doesn't have a lot of uranium mining. They have a lot of conversion. They have a lot of enrichment. But by far, their best uranium assets are JVs with Kazatomprom. So this project, the next 3 years, this year, next year, 2026, all of the uranium out of this deposit is already committed to Russia for their civil nuclear program. Russia has more than 20 reactors that they're building worldwide right now. They have this reactor export program. They build the reactor. They train the staff to operate it. They fuel the reactor for its life. They manage the waste, and they deal with the decommissioning. And they are the biggest nuclear exporter by far. So they need uranium. The increases coming out of Kazakhstan on a 100% basis are almost entirely, if not entirely, going to remain in the East. They're going to go to Russia with this huge export program, going to go to China, who's building 30 reactors and has very little domestic production of uranium, by the way, also. So yes, Kazakhstan is going to increase production. Yes, everybody who models supply and demand, ourselves included, is modeling for marginal increases out of Kazakhstan. How much are they going to project for 2025? It's going to be down from their previous projection, which was 100% of their subsoil use contracts, essentially their mining permits, that would be 30.5 to 31.5 thousand tons. Now, this is what they said earlier this year. They called into question whether or not they're going to hit that earlier this year. So they already kind of planted that seed, but they're not going to get to that number, period, the end. It'll be below that. Where it'll be maybe 24,000 tons between 24 and 25, which would be a marginal increase from this year. But again, all of that uranium is coming out primarily of this one new deposit that's a JV with Russia. So there's seemingly potentially bifurcation happening even within Kazakhstan. It's quite significant.
That's a development that I have to get Ben from Ocean Wall back on. I've been saying that for a while now, but I should actually get him back on soon. That's interesting when I look at the spot market though, because I'm thinking I cannot be the only one getting that information. You cannot be the only one getting it. There's people up the food chain that got that information before you. Why is the spot market not different? I mean, this summer was very calm, as you mentioned, only a little bit of buying, but also just it's very thin. And also, in addition to that, we're seeing some of these companies, even like Encore Energy, was part of the activity in the spot market apparently as well. There was at June 30th, they had purchased almost $30 million worth of uranium based on their Q2 report. So am I reading that correctly? It's over 60,000 pounds, but then they sold 90,000 pounds into the spot market, if I'm getting that correctly. And then the weird part, and you tell me what I'm missing here, but the cost applicable to revenues from that sale, so basically the cost they bought the uranium for was over $85, but they were selling it sub 60. So what I'm thinking is, with that happening, so what City's saying here, what you're telling me about Kazakhstan, Encore knows the spot market well enough to deal with it, right? So why are they buying uranium at over 85, selling it sub 60? I know you don't like discussing companies in depth when it's individual stuff. You do that on your newsletter. Perfect respect for that. But I'm just thinking in terms of the bearing that it has to the spot market. So why are stuff like that happening in the spot market if it's that tight?
Those sales were not into the spot market. Those sales were into a long-term contract that was signed
Oh, okay.
in previous years at either a lower fixed price or a lower ceiling. So
Okay.
that's why you see that realized price. The same thing when Cameco reports their financials, they show the realized price in the high 50s,
Hmm.
from the last quarter, if I recall correctly. That's going to move up quarter over quarter as the contracts that were signed that were being delivered into have both a higher realized price on the market reference portion of the contract. But as time went on, 2019, 2020, 2021, the contracts that they signed, even the fixed price in those contracts continued to rise. So there's a delayed reaction in the realized price for any company selling into term contracts when you're in a bull market. And the inverse is true in a bear market. Eventually, this thing will top out and come down at some point years down the road. When that happens, ideally, the miners will have signed sufficient long-term contracts at high enough prices that even if the price crashes, they're still delivering into these higher price contracts. So that's why that realized price is lower than the spot price.
Okay.
To answer the first part of your question, which is we can't be the only ones getting this information. Basically, the short answer to that is that utility fuel buyers are not investors. They're fueling their reactors. So they are going off of information that is coming from UXC and trade tech, but largely they buy what they need to buy when they need to buy it. With all of that said, a lot of these guys are old school guys that have been in the industry for 20, 30, 40 years, and they all experienced what happened in 07. And some of them still will never live it down in terms of signing contracts above $100 a pound in 2007, followed by a price collapse. So there's still some old thinking that this price move is being driven by speculation. And while Sput did consume a lot of uranium and pulled a lot of above ground inventory off the table 2021, 2022, what's driving the price here is not speculation. It's long-term contracting across the fuel cycle, and that in an undersupplied market, that's what's moving it. And so the fuel buyers, they have no incentive in trying to time the physical market other than hoping to get the best price they can. So when you see the spot price double in 6 months and you have your near-term needs covered and you can afford to sit back and see where it pulls back, that's the type of speculation that they'll do. But they're not going to look at, for example, like a WNA fuel report graph and see these giant alligator jaws between supply and demand and say, oh, shoot, I need to go buy right now. That's not how they operate. You also have to understand, for the entirety of their career, never have they gone into the market and not been able to fulfill their needs. That hasn't happened once ever for any of them. So you have that momentum as well. Well, I'm gonna get what I need when I need to get it. That mentality still pertains to the global nuclear fuel supply market and the nuclear utilities in particular. So basically, in our estimation, what's happening here and what is going to happen is that this pricing environment, which the utilities are not happy about. They're not happy about this, right? It's twice what it was a year ago. The term price is, 50% higher than it was a year ago, 60% higher. A couple of short years ago, they could buy liquid in a short-term carry trade for $40. Now we're at 80 term and spot. And if they need their needs met, they're going to have to pony up for it. So at the same time, the miners are here saying, hey, you can look at our investor presentation. We've got an all-in sustaining cost of $45 a pound. But when I call you to buy some uranium from you, you're telling me you want an 80 floor and a 130 ceiling. Go screw.
Mm.
And then the suppliers are here saying, where were you 5 years ago when I was bleeding out? You weren't supporting me then. Pay me what I'm asking, or you're not going to get uranium. So there is a bit of headbutting that's happening here. And that's with a backdrop of a historical price rise last year, leading into this period where what we think is going to happen is volume is going to come into the term market. We're going to have a large utility or two or three say, we accept this pricing environment. We're going to cover off for 2028 to 2035, 85 floor, 130 ceiling, sign it. And then that is basically a moment where all of the other utilities can say, okay, this is real. Price isn't going to go down. We need to buy what we need to buy, because the option of the reactor not being fueled isn't an option.
Hmm. Are you also paying attention to what's happening with uranium enrichers, though, in that case? Because, and this leads to something else I wanted to talk to you about, but I saw sometime late last week or something, a tweet from our beloved Harry Chris. He was talking about Uranco, and they had reported their H1 results showing their order book at $15.1 billion, which is just shy of the 2011 high, meaning the value of the order book was higher than that. And that was $15.4 billion, and it doesn't incorporate inflation, I don't think. But the point being, or at least how I and Harry read this, is that demand for the services is going up. So tails assays will again have to go up as well, and that might put pressure on the spot market. At the same time, again, this is kind of the information that I suppose those fuel buyers are also seeing. But are you paying attention to that as well in the meantime?
Yes, definitely. Across the fuel cycle, demand has risen, and that's been pretty obvious in what's happened to the price across the fuel cycle, and enrichment is no exception.
Hmm.
Urenco has seen a lot of new business with a handful of Western utilities avoiding securing future needs from Russia and seeking out Western sources from Urenco and Orano. So both companies have seen increased business for enrichment. The tails is tricky because they will have to raise the tails, which have been rising. Transactional tails have risen more than operational tails, and the operational tails rise is limited by UF6 availability. So without a lot more conversion or UF6, they can't really raise the operational tails very much because that's overfeeding. That's more material feedstock, to your point, that needs to come into the front end of that process with the higher tails.
Hmm.
What they have risen drastically are transactional tails. And basically what that means, if you sign a contract with Urenco at 0.3, that dictates a much larger feedstock. You get higher SWU prices. So obviously, SWU prices are through the roof. You get higher SWU prices, and you have more feedstock requirements with these high transactional tails. So the companies that have signed and are signing contracts for future enrichment that have to then provide the feedstock, that in turn, if that feedstock, as the feedstock arrives ahead of time of that enrichment process. So let's just say you signed a contract 2 years ago at 0.25 with somebody, and they provided the feedstock this year for a 0.25 enrichment contract, but you're operating at 0.23,
Hmm.
then you can technically utilize that extra feedstock. So that's something that they're doing. They're kind of making it up by borrowing from Peter to pay Paul with these higher transactional tails assays and higher cost of SWU. Enrichment is growing. They're expanding their operations a little bit. So is Orano. Conversion's still the big bottleneck. So there's not a lot of overfeeding happening, but underfeeding is far gone. It's been gone for 2 years in the Western for the Western enrichers. There's no underfeeding at all coming out of the West.
Hmm. Do you think it could also be that they don't have enough yellow cake now, and so the value of their backlog is high, not because those are new orders or they cannot fulfill it on time because of enrichment capacity, but they are the backlogs are high because they don't have the raw material, the yellow cake to put in there.
That's part of it, although the enrichers are actually decent sized customers for uranium and UF6
Hmm.
and conversion. So yeah, the Western converters, some of their biggest customers are the Western enrichers. So that U308, they're going to make sure they have their needs met. And the way that the enrichment contracts are signed, it's the responsibility of the utility to provide that feedstock. So the backlog, I would argue, mostly has to do with the enormous amount of demand that has come their way, not necessarily because there's a near-term structural shortage of feedstock.
Hmm.
So that's my estimation of that backlog.
Yeah. Okay. Good. Justin, we gotta work toward closing in here. A little bit shorter this time. I'm used to longer. What am I forgetting to ask you? What else should we be talking about?
Gosh, I think we covered kind of the most important elements of this. Yeah, the seasonality element to uranium is interesting because it doesn't happen every year. It's not something we usually bang the table on, but I think this year is unique because we've had this consolidation period for the bulk of the year. So we think we're going to have a strong season this year. I've made that prediction in the past. I've been right, sometimes been wrong, sometimes. 3 of the last 4 years have had very, very strong seasonal moves. And we think the setup is right for that to happen again this year. And like I said, that has to do with the fact that year to date volumes are so low in the physical market. But I'll leave you with something that I already said, but I just think it bears repeating because it's so important. Prices don't rise in an oversupplied market. And when you have buying volume almost entirely dry up and the price stays firm, it's a very, very important signal. The next move is going to be up. I don't know exactly when it happens, but it's going to be up, not down for the physical market. If and when that happens, we're going to see the equities respond, especially coming off of these bombed out valuations. Now, all of that is to say, I have no predictions on what's going to happen in the broad market other than be prepared for volatility. It's probably wise, probably keep some cash, probably own some gold. With all that said, we're pretty pumped for the incoming season for sure.
When's the seasonality? Well, I mean, what are the seasons again? Please remind me.
It's usually August, September is when the sector tends to bottom. It's typically a strong move September through January, February, March.
Okay, so right on the back of WNA, everyone's kind of waking up. Cuppy's
Exactly.
there, making people afraid of the shortage, and then everyone starts buying. I get it. Good.
Exactly. Yeah, Cuppy's the catalyst. No, there's fuel conferences in the fall. There's new budgets for utilities, and we also have kind of these added pieces, which is increasing clarity around the waivers process for Russian sanctions. These uncertainty stalls out utilities. They don't like uncertainty in the market. And while it's primarily affected the US utilities with the Russian sanctions, it's affected the global market as well.
And hopefully, actually, I'll get to meet you somewhere along the way of those conferences. I'm going to try my best to go to them. I've been enjoying conferences, so maybe some reporting from there is in place as well. And actually, now that I'm thinking about it, we have some catching up to do there. Anyways, I'll tell you more about when I see you. But I understand you're busy now, Justin. So we'll let you drop off and do your thing. Thank you so much for sitting down with me. As always, it's been a pleasure. It is uraniuminsider.com for people wanting to know more. And as you're visiting that website, as Justin is dropping off, I am, of course, going to be moving into, I'm going to say it, my favorite part of Transition Talks of the Transition Talks episodes, really. That is, of course, the CEO barbecue, and not the CEO barbecue itself. Actually, there's a cherry on top for me. That's the disclaimer. There is a warning on your screen right now. I am not kidding, although I do tend to try and be funny, and emphasis on trying. But there's a warning on your screen right now. Please read it. You're not only obligated, you're advised to do so. That's the first and the last thing you're gonna get advised on in this video, because this is not just some disclaimer. It is an actual warning. This thing will help you if you understand and if you listen to what I'm saying here. And that's part of it. I am here to make money. I make money from the existence of this channel. And specifically, the way this channel makes money is from companies paying for the production of these interviews. So I would like you to be aware of the fact that all companies that you're going to see featured on this episode today have paid for the production of these interviews. In not all companies on the channel pay for it, but even the companies that are not paying, they are still likely seeing their participation in this program as a chance to do some marketing, regardless of whether they're paying, how much they're paying, what they're doing. These companies come on here thinking, we're going to do some marketing. So start by understanding that most company communications out there is marketing. This interview, the other interview that didn't disclose it, that they were getting paid, someone who did a research quote unquote piece and saying, oh, this is a buy, I make a buy recommendation or whatever. They are getting paid to produce that. That is marketing material. The presentation of the company, when you talk to the CEO during a conference or I don't know, or you reach out to them on Zoom or whatever, that's marketing. Website's marketing. Twitter account is marketing. Everything that the company does publicly is marketing. And although I don't make bias or recommendations because there's a clear conflict of interest, in my opinion, if you take money from the company, then you turn around and make a bias or recommendation, there is a conflict of interest there. Many out there will still do that, and you should be aware of that inherent bias. There's many other biases too. People might own the stock and not let you know. I will, of course, let you know anytime I do own companies that I interview. For example, in this interview, I own shares of Baselode Energy. I'm also going to disclose it a second time when I'm actually talking to James here in a couple of minutes. But just know that everyone's always biased all the time. That's it. Just assume that online, you're going to be safer for it. And that bias won't always be clearly disclosed. Most of the times, actually, unfortunately, it's not clearly disclosed. Nobody's going to take 5 minutes to give you a disclaimer that they think is going to hurt their watch time or whatever other silly metric. So it is safer for you that anytime you're watching any type of company specific content, you have to approach it with a dose of skepticism. You have to know that there's an inherent bias baked into it, and you have to treat everything as marketing. Take it with a grain of salt. And again, although I might try to be different than other interview channels, by looking at more than just a presentation of the company or the fact sheet or the website. And unlike most interview channels out there, I don't give the companies the questions up front. There are no questions off the table with Resource Talks, and the companies get no say in what ends up in the final video. Even though that is the case, these things should still be looked at as advertisement and not as research. This is not research. Research you do by looking at the official filings. And least of all, it's a recommendation, okay? Unfortunately, I'm not a magician. I don't have any superpowers. I don't have any superior knowledge about what's going to happen to the stock. I don't know whatever's going to go up or down. Nobody out there really does. If they did, you're not going to know about them. They're not going to be online. They're not going to tell anybody about it. Can you imagine knowing where the stock is going to go just 10 out of 10 times and then making an online course about it or something? I wouldn't. Anyways, no guarantees here. Maybe that exists out there. What do I know? So no guarantees here. Besides one, and that there is that guarantees that there will be forward-looking statements in these conversations. The conversations that you're about to listen to are general and impersonal in nature, and they contain hopes for future events that may or may not take place, depending on many different factors, both within and outside of the company's control. Be aware of that. Be aware of the inherent risk to investing and the increased risk of investing in mining and the mineral exploration industry, and be aware of the inherent bias. And please talk to a professional investment advisor, as well as do actual research before taking any decisions. Research doesn't happen on Twitter. It doesn't happen on YouTube. It happens on setterplus.ca. That is an official government website where companies are obligated to file their company filings, their official filings. So we go on there, management. I keep saying this. I'm going to keep saying it in every episode. You need to read the management discussion and analysis. That is actually readable. It is not easy. Well, at least to me. But over time, it gets easier a little bit. So the management discussion and analysis, what you want to read, the MD&A, that's where you want to start. It is an actually readable document, so it's not dry financial stuff. You do want to look at the finances, though, so you want to go to the financial statements as well, read those. And lastly, look at the management information circular. Oh, not lastly, because lastly, what you're going to do is, when you've actually read all those, look at the technical documents as they file. Typically, that's an NI 43-101 document. Go to setterplus.ca, look it up, figure out how to use it. It's not always as easy, but you can figure it out. You're a smart guy or gal. Who am I kidding? There's no gals watching these things. But you can figure it out, do it. That's actual research. And then talk to a professional investment advisor. And don't take any decisions before you've done that. Because if you do, you're going to lose your money. The disclaimer's on your screen right now. Again, if you don't enjoy losing money, what kind of a weird person doesn't enjoy losing money? But if you're one of those people who don't enjoy losing money, read them and be careful out there, okay? With all that said, though, that's going to have to be it for the disclaimer. I am actually going to kick it off by going to one of my favorite places on the planet, with that being the Athabasca Basin, which is in northern Saskatchewan, because apparently I'm a weirdo, because whose favorite place is the Athabasca Basin? Well, I guess I am like that. But also because it's been a while since I've gotten an update on Baselode Energy, which is a uranium exploration company listed as FIND. That would be FIND on the TSX Ventures Exchange in Canada, where an average of about 120,000 shares trade daily, with a 133 million shares outstanding and a $20 million market cap. To date, this is a 15-cent stock. But I'm not doing the full company overview as I typically do, as James and I have done a couple of dozen interviews really over the years, I think. And instead of doing all that, I'll just jump right into this because James, last time you and I spoke was when you had just started drilling at Bear, and you've had 5 news releases since then, including you mobilizing for a 16,000 meter drill program at Hook, starting drilling at Akio, hitting radioactivity at Akio, and then discovering yet another zone of radioactivity 6 kilometers northeast of Akio. So all is well with the world, you think, but Mr. TSX wouldn't agree with you because your share price has been cut in half since the last time we spoke. And I myself am heavily underwater. So fair disclaimer, not as confession. Obviously, I am underwater. I own shares of this company, but they are underwater. So what do you make of this? What's going on? What does the market want from you?
Good question. I really wish I knew what the market wanted. Maybe ultra high grades, which are rare things to find, even though we're in the Athabasca. But I think we've done everything properly. We've got funds to drill. We announced that we're drilling 16,000 meters and traded down. So people who have invested in um, previous placements are not sticking around to see the results of their investments. We announced a new discovery, traded down. So it's difficult to say what's going on. Yeah, I'm in the same boat as a lot of investors. I've put my own money into it. I've purchased 40-cent warrants last year. So those are under the water too. I'm feeling the same pressure as a lot of investors out there. But we keep our head down and we're trying to move this company forward the best way that we can. That's continuously improving Accio and hoping to get to that, looking like we're getting to that resource estimate by the end of the year and exploring for a new discovery. And we're funded to do that and we will continue to do so.
Are you seeing what's happening right now? Stock is basically at an all time low, which again is very curious to me. I mean, you listed without a discovery, and then you've done a bunch of work after that, and then the stock is now lower than what you listed it at. Are you seeing this again? As you mentioned, your shares are underwater. Are you planning on averaging down? Are you seeing this as a buying opportunity for yourself, and are you going to be buying in the open market?
I wish I could. I just unfortunately don't have the funds available. But
Okay.
if I had the funds, yes, I would love to average down on this. Again, I see nothing wrong with Accio. I think Accio is a project that could be mineable in the future. It has everything going for it. The preliminary economics that we've done internally look fantastic. This is something that doesn't require a lot of overhead, doesn't require a lot of capital to get it going, and to pull the mineralization out of the ground. It looks pretty darn easy, pretty cost effective. And as the price of uranium continues to go up, well, that just increases the profit margins. So we think that Accio is a lucrative project for down the road that could be a mineable scenario that delivers excellent margins.
Well,
So
but
we'll continue to push that, and that's where I see big value long term for investors. Short term, we are looking for that new discovery.
hmm. That's exactly what I was going with my but what do you do to make investors care about that over the short? What realistically, what can you do to sort of turn this ship around here?
More drilling we do in Accio, no one, it seems like investors have never bought into it, unfortunately, because since 2022, we've traded down. So that's 2 years of trading down continuously, even though we've been putting out fantastic results. Like if you look at some of the top released results in the last 2 years, Accio places amongst the fifth and the sixth. So it's not a nothing discovery. But again, it's the market hasn't taken hold. Being in the Athabasca, maybe we have that hindrance that you have to have high grades. We do have high grade on the project. Not every hole is popping out high grade, but it's still higher grade than global average, which is quite significant and much higher than global average. So it is a significant discovery. It's average grades around things that have been mined in the Athabasca that a lot of people don't know about. When you get these 0.2%, again, I point to Uranium City that had 60 million pounds mined at 0.2%. So if you can mine 0.2%, why can't you mine at 0.3%? And that's kind of that's one of the things that I think people dump on Accio the most is just the grade scenario, but it's really not a question of grade. In the end, it's always a question of economics.
Hmm.
You can mine hundreds of ppm, 200 ppm, 500 ppm in Africa in large open pits, and so you're mining a lot of material. So it's not for the uranium space, it's not a question of the grade, it's a question of the economics and the mineralogy. And we've got it all working for us wonderfully. So unfortunately, yes, unfortunately, the market has never gotten into Accio, but we need to keep pumping out those results because we need to define it on our end. Will the market eventually take hold of it? Maybe they will. If the price of uranium goes up too, while we're releasing assay results, maybe that's a good combination effect. So is that going to move things on its own? There's a chance, but the last 2 years have proven that it really hasn't, unfortunately. So a new discovery. And that's where we're pushing really hard. And we have been all year. We've been exploring Catharsis, Bear, and even our Hook project. Since the Accio discovery in 2021, this is really the first large-scale exploration we've done outside of Accio. We drilled Catharsis for the first time in one area last year, but this year we've spread everything around, and we love what we're seeing. So it's been very fortuitous, but we're not done yet. We've still got at least another 5,000 to 6,000 meters to drill on the Hook project, and we've been drilling away quite a bit, and we're seeing a lot of characteristics for basement hosted deposits. The fluid pathways are there. Now it's just a matter of targeting into the right area that has the I guess the focal point where the fluids would have migrated to and precipitated uranium. And then the other thing that we have to do is we're not raising money anytime soon. We are well cashed up to the end of this year. We've got cash for next year, but moving forward, I think we have to find more quality investors, people who will stick around for longer than 4 months and 6 months. We need people who will stick around and see the fruits of our labors pull through in 2 years, 3 years, 5 years, things like that.
Mm.
Just that's one of the big things that I am working on and have been for the last while, and will be implementing that moving forward.
There's loads to touch upon there, and I hope we'll get to all that. Definitely the new discovery. That's something I've been very interested in, the radioactivity that showed up 6 kilometers northeast of your Accio discovery on the Hook project. I want to talk about that later on, and I hope I'm not, or at least I'm not intending to bully you with these questions or whatever. I'm sincerely trying to understand why the market doesn't care about something with this, specifically given it's close to surface. That was my main thing, which you typically don't see with uranium deposit. At the same time, I'm seeing, 900 meters deep, someone comes out with 3%, the market eats it up. And there's most companies in the uranium land are promo companies, in my opinion. Market eats it up. Why does the market not care about this? And so I sound frustrated. Obviously, again, I'm underwater on this, so I'm biased and frustrated. So that's where I'm coming from with this. Again, I'm not intending to bully you in any way or whatever. But luckily, as you mentioned, you don't have to raise capital. You raised some flow through in February at 65 cents. I believe it was flow through at 65 cents, hard dollars at 45 cents. Total, that was $6 million that you raised. How much of that is left in Treasury right now?
All of it. Yeah, we haven't touched any of that from the placement that we did this year. We haven't touched any of it. We're keeping that for next year.
Okay.
We had 12 million to explore with this year from flow through that we raised last year. And that's what we're focusing on. And we're hard copying that boom, 12 million.
Oh, okay. And so that's going to be enough to cover this 16,000 meters at Hook.
Yeah.
Okay. And then
give or take. We did drill more at Bear and Catharsis than planned, and we also did more geophysical surveying than planned. We're still waiting for some of the invoices to come in, especially with the geophysics, because they would be costly. But we're still waiting for some of those to come in to put some final numbers in to figure out what our spend is going to be at Hook and Accio.
Okay.
But from a vantage right now, we're still on track to deliver quite a bit of meterage on Hook and Accio. I think we're just over what I'd consider to be the halfway mark now. We're close to it. And we've got probably another 6 weeks of drilling, maybe 8 weeks of drilling with 2 drills on the go.
Okay, and in terms of hard dollars, you raised $1 million hard dollars in February. You had some before that, not too much, but what do you have right now in hard dollars?
Hard dollars, we have at least 5 million in the bank.
Oh, okay, well,
we've not spent our hard dollars in exploration. We've been very good at just spending the flow through portion of of everything on exploration purposes and keeping the hard dollars in the bank. So we're well financed to keep the lights on in this company for a very long time.
Yeah, you're not anything. Well, as far as I remember last time, or just generally how you've structured this company is because you're part of the OR group. You have pretty much the lowest G&A, I believe, among the uranium explorers. Is that going to change? I mean, are you planning any additions to the G&A?
Nope. Nope. Everything stays the same. We have a tight crew who do a lot of things. I'm very appreciative of that. And we wear a lot of different hats. But that builds us stronger individually and as a team.
Let that's the thing that I like about OR group company. So I'm good. That's not changing for the time being. Let's talk about the work though that you've been doing, as I more specifically about what you've been drilling, because that's really where the hope is, I suppose, as you said. 3 projects in total this year, 3 land packages could turn into multiple projects over time, as we're about to find out. But and I hope we'll talk about all of them further on. But Catharsis, you did a few updates on how drilling went there. You said you've hit hydrothermal alteration and structures in 2 additional target areas, but we haven't seen any assays yet. When are those coming out?
You won't see any assays. There wasn't anything that we considered material.
Okay.
They're encouraging from a scientific point of view, very encouraging from a scientific point of view, so much that it has to be drilled again. But you won't see anything as we didn't deem the results to be material.
Hmm.
Speaking on Catharsis, though, the DG area, which is a 5 kilometer trend in a V shape, fantastic results. The clay alteration was there, the hematite overprinting was there, and that hematite carried uranium. We know that for a fact based on the results that we've received. Where we have strong hematite, it is above average uranium, well above average uranium concentrations, like over a double digit. Now, let me just put something into perspective for you. Average concentration of uranium in all the basement rocks across the Athabasca range between 1 to 5 ppm uranium. So even though Athabasca is home to extremely high grades, it's not like the rocks around them have insane amounts of uranium. The average background rocks in the Athabasca Basin as a whole have between 1 to 5 ppm uranium. When you start getting up to around 8 ppm, so yeah, it's encouraging. 12 ppm is where I would consider to be the point that you call something anomalous and encouraging. And that's like the cap. There are some rock types like pegmatites which do have naturally higher occurrences of uranium. That's just the way they are, especially in the Athabasca. But without having pegmatites, if you're seeing above 12 ppm uranium, you should be paying attention to it in your basement rocks. And at Catharsis, where we're seeing hematite, we're seeing above 12 ppm uranium. So to me, that's the fluid flow that has brought uranium in. In the first hole that we drilled, the one that got us really pumped and encouraged about it all, we had a gamma probe peak that was in core loss, so we never saw it. We never saw the radioactivity in the core loss, but there was a pretty solid gamma probe peak that really had us encouraged. Where we sampled, there wasn't a lot of strong alteration in that hole, but there were little skiffs, wisps of hematite and limonite, this oxidation front that shows up in a few places. Where we sampled those parts, but we also sampled some of the dead rock. And it's those parts with the oxidation front that we're seeing 15, 20, 30 ppm uranium.
Hmm.
And all the rocks around it that have no hematite, no limonite, no nothing, they're dead. So that is the exact fluid system we're looking for. That's the oxidized fluid system carrying uranium into this massive structural zone and precipitating out. We have 5 kilometers, and that's all holes hit that in that area. Every single hole hit. Where we hit the hematite, we had above average, we had anomalous uranium to be encouraged to go back and explore because it looks like the fluids are carried. 5 kilometer massive structural trend. Now we have to go and figure out where is the possible pinch points. Where is this area that would draw in fluid specifically? And that's what we will focus on moving forward on Catharsis.
Hmm.
So definitely a project. And there's also rare earths in the area too. We have an isolated pegmatite that's in top of the area where we're seeing all the uranium. We have an isolated pegmatite that is not associated with the uranium structure at all, but it's a rare earth bearing pegmatite. So we have two possible flavors there to explore for in the future. Very encouraging. Catharsis. So one of the reasons why we have taken, well, multiple reasons why we've taken this exploration approach this year. Number one, we had to move funds onto the projects. If in Saskatchewan you have maximum 2 years, well, after your initial 2 years, you have to start putting funds onto the project. If you don't, then you lose the ground. We want to keep all of our ground because we think it's highly lucrative for discoveries. So we had to put money onto our projects this year. Number two is obviously trying to make that discovery. And in doing so, by exploring multiple projects and multiple target areas, we're able to better rank our targets moving forward, which gives us focus for 2025. Since we've already had the cash in the bank for 2025, we wanted to make sure we had areas that we knew we were going back to. So once Hook is all done drilling, and once we have all the results back from everything, we'll be able to sit there and figure out, start ranking things, which area is going to give us the next potential for discovery, and put our focus into that.
I want to talk about pegmatites later on too, so I'm kind of gonna make a mental note about it, because you have those at Hook as well, and they could be structurally important or not. I'll talk about it. But Catharsis, when are you going back to Catharsis?
Not until next year at the earliest. And we would, before we go back with the drill program, we would do a ground gravity survey, maybe even a ground resistivity survey, just in that DG area to follow up to better fine tune the geophysics, the subsurface geophysics in the area that could provide us with better drill targets.
Okay, but drilling,
that's one.
and then drilling a Catharsis, how did that go? I mean, everything on plan, on budget? Have you gotten all the invoices? Everything's taken care of?
Except for the geophysics, yes. The
Yeah.
airborne geophysics magnetics that we flew, yeah, we've got everything back. We spent about 2.1. We did go over budget on that one. We drilled far more than we did, but we put more drill holes into that DG area than we expected to begin with. And we drilled some a little bit deeper. We
Per
had
meter
some other
cost, what was that?
per meter costs. It was a little bit higher than usual. We're up around the $700 per meter, but that's because we had to build a camp and tear it down. And that's a sunk cost that we can't. We operated right off the highway, and we don't want to leave a camp there during non-operational seasons. It's prone to vandalism,
Sure.
prone to destruction. Even last year, we did the same thing. When we drilled the first time in Catharsis, we had the camp in the same spot, and ironically, like, we pulled the camp down, but ironically, a forest fire rolled through there only weeks after we moved the camp out. So, hindsight, hindsight was great. We saved our camp. So to have that, we want to build Catharsis into a larger project in which we can put our camp into a more secure location and keep it there for, for a few years. So I think it'll be a while before we get back to Catharsis. We may not get back to Catharsis next year. We might. It's, again, we're still waiting to see everything from Hook at the end, but Catharsis is already ranked very high on our list of areas to go back to.
Right. Okay. Makes sense. About not going back to it directly. Bear, you set out to drill 68 holes, 1,500 meters total at Bear. I assume that's done as well by now. How did that go?
Yeah, we had that in one of our releases as well. The final results were buried. We saw a lot of the same things that we saw at Catharsis. We're seeing a lot of white clay alteration. We're seeing redox fronts. We're waiting for the assays to come in on those. Very encouraged with that. Bear, we were able to leverage a lot of historic data, so that really helped us move it along. In the end, we drilled 10 holes, 2,100 meters, spent about 1.1 million on it. We're still waiting for the geophysics invoices on that. But that one, our per meter costs were down to $500 per meter. 505, 510, somewhere around there. Because we didn't have to build a camp for that one. There was a
Oh, okay.
lodge that we stayed at, and that just it saves a lot. We were
Hmm.
able to access that. To use that lodge for catharsis, the travel time just with a helicopter, it's too much. Increases to the cost increases are just too much to warrant us using that cabin for a drill program at catharsis.
Hmm. So you want to see the assays first, and then you know if you're going back to bear.
Yeah. Bear is one of those things that it's such a small project that now that we've put a drill program on it, it will be in good standing for at least 10 years. So theoretically, we don't even have to go back there, not for a very long time. However, again, the idea to discover more mineralization, that's always the lucrative draw for an explorationist. We drilled to the limits of the historic data, and there's still, based on the geophysics that we've recently flown, about 1 to 2, I think it's 1 to 2 kilometers west of where we drilled. There's a lot of ground that looks quite structurally complex and has a lot of signatures that we've seen in other areas, specifically Akio, that warrants additional ground follow-up with geophysical ground follow-up. So that will be our next step. Just like catharsis, we need to do more gravity surveying in that area to find the right focal point for where these fluids would have migrated into and possibly precipitated uranium.
Okay. Okay. Um, and yeah, I think we've talked about that before, but I'm still thinking like these projects already are showing the potential to be more than zero, right? We that's what we know after these two drill programs is like, okay, you had these projects, they were valued at essentially zero. I'd argue that they're still valued at essentially zero, but we now know they're not a zero for sure. We don't know if they're a line, but we know they're not a zero. That's kind of how I think about them. Why not find a partner? I'm sure there's a lot of demand for. I just listened to an interview with someone from the TSX, and he was explaining that there was a lot of demand for uranium IPOs. There was people looking to list uranium companies. So why not option it out or sell it to someone and use that for potential funding down the road?
Has been considered, especially after these last few drill programs. It has been considered, knowing how much we've diluted the company to drill as much as we have, especially on Akio. Uh, I've seen how it works for other companies, which works quite well. That they don't have to go to the market, they don't have to raise funds. They get a lot of funds in through these JV options, and that really supports their exploration moving forward.
Hmm.
It's a possibility for us. Why not do it off the bat? Well, because we've staked all of these projects using the same criteria, and the first project that we drilled made a discovery. So we wanted our shareholders to benefit with the discovery being 100% baseload. We didn't want to share a discovery.
Okay. Yeah, if and when you crack the code for Accio on a larger scale, then these two discoveries, these two projects, so Catharsis and Bear, they become more valuable as well, in my opinion, because it's your knowledge that can be applied in the same way. Um, I'm a ginger hillbilly from the Balkans, so patience is not necessarily my most strongest of suits. But I'll try to wear it for now. Hook though, Akio is really the star of the show here on Hook and for Baselode as a whole. But you made a new discovery. Well, a discovery of elevated radioactivity. I don't know if we should call it a discovery yet, though. Again, this is 6 kilometers away from Akio. It's 30 meters of continuous radioactivity with a massive hydrothermal alteration system to it. So far, this smells like Akio's fingerprint. So talk to me about that. What have you found exactly, and how does it fit within the broader geological model that you have for the Athabasca 2.0 thesis as a whole?
Fits perfectly. Fits perfectly within the Athabasca 2.0. It's everything we're looking for.
Hmm.
It's So we've drilled 2 holes into that area. We did walk away from there because again, we're looking for immediate results, but
Yeah.
we're going to save enough meterage in the end after drilling a number of targets on Hook to definitely go back to this area and continue drilling there. We're also waiting for the assay results to come back to further guide us because we did release radioactivity and there was pegmatite there.
Hmm.
Now, why are we excited about this? And, is it just a pegmatite? And the answer is no, it's not just a pegmatite. And that's where I think our news release wasn't probably the best to demonstrate everything. I can start with the image that we had in there. We've got a figure showing Accio and the cross section of where we drilled, where we have a pegmatite going like this, but all of our regional fabric is like that. We drew the pegmatite like that because when we drilled the Beckett Lake drill holes back in 2021, before we made the Hook discovery, and they were all uranium bearing pegmatites, very radioactive. We can always go back there and discover more uranium in those pegmatites. They were all subhorizontal and flat. So we saw this pegmatite as being kind of the same thing. However, the difference with this one and what another interpretation that we do have, just we didn't release it, was that all of the regional fabric is like this. We've got orthogneiss, which are like granites and things like that. And then we've got our Wollaston rocks. And then typically you've got a pegmatite there, then you've got more orthogneiss. That is the Athabasca model to a T, is orthogneiss, Wollaston, metasediments, pegmatite, orthogneiss. And it's that contact between the metasediments and the orthogneiss where the pegmatite is. That's where you see a lot of radioactivity. That's where you see a lot of high-grade basement-hosted uranium structures. So our other interpretation that we didn't release was that the pegmatites could be like this, and that is more fortuitous for us. The other reason we're very encouraged with this area is the radioactivity picks up way before the pegmatites. I've drilled a number of pegmatite occurrences, and they're sharp. You go from your whatever rock it is, and you hit a pegmatite, all of a sudden, then your radioactivity just peaks. This area, when we're still in the alteration, we start seeing heavier hematite alteration right before the pegmatites. We see an increase in radioactivity, and considerably, and it stays there, and it continues into the pegmatite. And then once we get into more fractured pegmatite, more altered pegmatite, that radioactivity increases. Where we have the strongest peaks in that pegmatite is where we have hematite veins, clear, distinct hematite veins that increase the radioactivity. I think those will come back with some pretty decent numbers. I think they'll come back with some pretty decent uranium numbers. But that structural context, and again, seeing this hematite-rich fluid system with elevated uranium, and if you look at the radioactivity profile, and that was one of the reasons I want to put it out there, it's not a profile that it's wild and mad and goes bottom out and peak again and bottom out and peak, which I've seen plenty of times with pegmatites. This is tight. This is continuously elevated radioactivity, and it's not a peak. It's not a little meter blip here. It's like you said, it's 30 meters of just elevated radioactivity. That's scale. That is huge. That's a big system. So now we hit that at around 173 meters depth. So the idea is to go back into this area once we have the assays back to identify the uranium thorium ratios, which I think will be predominantly uranium with very little thorium. At least my fingers are crossed, that's the scenario. And to follow up the idea that the pegmatites are oriented like this, vertically and not cross-cutting. So we're gonna test that idea. And if we're right that the pegmatites are vertical, I think we will have better results. And then we've got a few kilometers of trend test, geophysical trend in that area to test. And the interesting thing about it is we have EM showing us one thing, that the EM goes up this way, but then the gravity goes down the other way. We drilled where the two overlap, but we're not entirely sure which geophysical survey will show us the better trend. But realistically, where we are anyway, we're going to follow up with drilling. We do tight enough space drilling, still within the anomaly, the geophysical anomalies where they overlap, that the geology will guide us forward to follow up the trend. But with that, like that area is open. The other thing to note about it is the extent of the alterations halo. Again, two drill holes into it, both drilled the opposite way, one going to the east, the other one going to the west. The one that going to the west hit. It's a 300 meter wide alteration corridor that is completely blasted with fluids migrating through there. The radioactivity that we're seeing is all on the western side of this fluid system, which is very similar to what we're seeing at Accio. Accio has a larger fluid system, minimum 600 meters. I don't think we've ever fully discovered the extent of this fluid system, but all of the mineralization on that fluid system is on the west side. So we're seeing these repeating geological patterns, these structural controls, and now we start to apply that with exploration along the project as well, looking for these similar type of structures. When we encounter these massive hydrothermal systems and we start thinking, do we go east or do we go west? West looks like it's the most prevalent in the area. Doesn't mean it has to be. Maybe fluid systems change and the structural characteristics change within it, different areas, and maybe it would encourage mineralization to precipitate on the east side of these fluid systems. But as it stands now, we've got a few models that seem to be working within the area, and we will continue to follow those as a guide. Very encouraged with that new discovery. And unfortunately, again, we put out the news and we've traded down since. So maybe it wasn't marketed properly. Maybe it just wasn't, investors didn't take to it, didn't understand it. So we'll wait for assay results to come out, and hopefully that will garner more attention towards the area and prove that it is a discovery.
Well, you of course you need assays for that. What you report on is radioactivity, and so that's not, well, you hope or assume that it's going to be uranium. That's not always the case. Maybe that's it. What I noticed in it, or when I first read through this news release, I was like, oh, ACHO 2.0, maybe, hopefully. And so what I'm seeing, or what I'm getting here from you, is that basically the mineral assemblages and the radioactivity association with the minerals is the same as the one on Accio. Like those 9 pods on Accio, the radioactivity is associated with the same minerals, and so the mineral assemblages are also the same on this new discovery. Is that right?
Not quite. We don't know the mineral assemblage on this new discovery.
Okay.
We know all of the uranium bearing mineral, or the 99% of the uranium from Accio is all coming from uraninite.
Yeah.
That's the mineral of minerals you want in the uranium space. That's what we know for a fact. We haven't done a mineralogy work on this new area yet. And without having the assays back, we can't do a preliminary one in which would help us guesstimate it. Again, that's very simply done using the uranium thorium ratios. But we would be following up with mineralogy studies thereafter.
Okay. But it's also not possible, I suppose, to comment on it in terms of size or what you hope this is going to be. There's nothing you can
wide
say.
Open.
Yeah.
It's got one drill hole into it that tagged the start of mineralization at 173 meters vertical depth. It is open at depth. It is open on it's open up to the surface. It is open on strike, multiple kilometers along strike. This thing is wide open. We don't know which way it's going yet, which is why it will need more drill holes.
Well, but
we have to drill it before we leave the season. We have to drill it before we're done drilling this season.
Okay. You don't know how much more you want to drill it. You want to see the assays first, and then you're going to decide.
Yeah.
Okay. So what I'm asking about size, and I understand it is early days, but as you've pointed out to me before, the redox front at Hook is an important part of the whole story, specifically relating to how the uranium got deposited there in the first place. Because as far as I understand it, redox fronts control uranium precipitation, and that's why their size is of importance here too. But so with this new discovery specifically, how are you going to differentiate between local versus regional redox fronts when assessing the potential for this to be a large scale uranium deposition, which is what we want it to be?
It already has the large scale potential to it, and that's based on the hydrothermal corridor. We've got a structural corridor of 300 meters on either end, or 300 meters wide. and it's blasted. The fluids that have gone through there have just completely changed all of the mineralogy. There's no remnant rock that remains unaffected.
Hmm.
Everything is just completely altered.
Hmm.
We've got clay alteration, the initial clay alteration. Then we get different episodes. You can see different episodes of hematite coming in there. And the one that we are chasing, which we think is the right one, is basically right at the tail end of this whole alteration complex. It's where a roll front should be, or a redox front should be,
Hmm.
because as I've done a lot of fluid studies back in the day in university, as with things like the Baselode effect, you're going to have your heavier elements within entrained with fluids that will migrate along to the edges and precipitate out towards the edges of a fluid moving in a corridor. And that's what we're seeing right now, and that's what makes sense. The the 30-meter width of elevated radioactivity is what tells us their scale here.
Okay.
The best way, like, I've developed a thesis a long time ago that these Athabasca structurally controlled deposits are all essentially roll front deposits, like you'd see in Kazakhstan, like you'd see in the US, but those are all sedimentary hosted, where the uranium continuously migrates from whatever its source, it gets leached, and it just flows down the sedimentary layers and eventually just precipitates in an area where it meets a reduced front. And it's like pulses of this thing. Just they continuously migrate down, migrate down, migrate down. And not everywhere along that redox front is going to be mineralized. That's proven. You can go to Kazakhstan and see that. You can go to the US and see that not every redox front is mineralized. And that's the way I envision these structures as well. That yes, we've got a 300-meter wide corridor. We've got alteration and mineralization on this side of the corridor. Now we have to think of a roll front, but being along this massive corridor that's going to run for kilometers and kilometers and kilometers, not only on strike, but also at depth. So it's a big sheet of paper that we've just tagged one little part with. And now we just have to start intersecting that same sheet at different locations to figure out how big this thing can really be.
Hmm.
But if it was just a little blip, I don't think it would have the scale. But it was a significant hit. It's the best hit we've drilled anywhere outside of Accio. It's even better than some of the drill holes we put into Accio based on the
Scientifically, that
radioactivity.
is, though.
Based on the radioactivity, yes.
Okay. Okay. Well, I hope the assays agree with you on that one. When are you going to have them out again?
Good question. So we didn't start drilling there until July. Assays probably went in mid-July, between mid and July. The lab's been pretty good, 6 to 8 week turnarounds. So I'm expecting maybe end of August, middle September. I'm
Okay,
hoping earlier than that.
got it. End of August. So that's 3 weeks from now, 4 weeks from now. Good. I can be that patient at least. What you also mentioned that the radiation is structurally controlled in the same way as Accio. How is that? How do you know?
Well, we don't know if it's the same type of structure. It's just that whole fluid corridor. The idea of a massive fluid corridor and mineralization precipitates predominantly on the western end of the corridor. Accio is a negative flower structure. We know that pretty well for a fact. We've drilled enough in there. The model was developed very early on, and it's proven true every step of the way. We're not seeing the same type of structure yet in this new area. Again, with one hole, it's kind of hard to figure that out. We think this one might have more of a shear component to it, which is very interesting in itself, because there's a lot of the bigger deposits out there are shear controlled, whereas Accio is dilation controlled. Two different mechanisms.
Okay. What does that hang on? So
It
yeah, go
it, it
ahead.
just it so what that does is just fluids move differently.
Mm.
In a dilation scenario, your fluids want to come down preferentially. That's not that could be very well the same case with a shear, which does happen quite a bit, because as you shear two planes and you get them coming along like that, you open things up. All right, just do it like that. Shear like that, and you open something up like that. Everything would come down. So that's arrow is a shear plane. Arrow is a shear hosted deposit.
Yeah. But with you though, there's no indication that, and I understand this is your whole Athabasca 2.0 thesis where you're thinking that these are basement hosted deposits versus the typically unconformity related deposits further into the basin. And so, well, the Athabasca Basin really is kind of a strange beast in that we don't quite know, or well, we don't quite yet agree on how the uranium got there in the first place. But with this new discovery, are there any indications that it's maybe unconformity related fluids that flow into and are contributing to the basement hosted system that you've discovered at Accu and then potentially this new discovery as well?
Very good question. Very good question. And I don't see why not. We're I think, what are we, 4 kilometers away from the basin edge? Maybe closer. I might be confusing with Accio. Yeah, I think Accio is 4 kilometers from the basin edge. I think this one's only about 2 kilometers away from the mapped basin edge. So it would make sense that the Athabasca was overlying this area to begin with. Heck, there could even be Athabasca within the area. We just haven't drilled enough to know. The only difference, yes, there's two schools of thought to the sources of uranium in the Athabasca. One school of thought says it all came from the sandstone. Sorry, there's three thoughts. One source says it all came from the Athabasca sandstone. All the uranium came from the Athabasca sandstone and just has migrated around in there since. The other school's thought says no, it's all come from the basement rocks. It's come from the black shales, metamorphosed black shales, come from the pegmatites, and those get broken up and uranium gets leached from there, and then they migrate along these structures. And then there's the other school of thought that says, why not have both? I subscribe to the latter thought that yes, you have Athabasca, yes, you have basement. Is there an importance to the two? That I'm not entirely sure. I think the Athabasca would have more uranium in it, the fluids, but they're also potentially the better oxidized fluids, and that's where the oxidized fluids could have come through. But if all of your structures, the Athabasca does not control the structures in the area. Every single structure that hosts an Athabasca deposit, whether it's a basement hosted deposit, whether it's an unconformity deposit, all of those structures controlling the mineralization are all in the basement. They all originate in the basement rocks. And that's what we chase preferentially, is we chase the structures that look like they were large enough to induce fluid flow. So whether the fluids came from the basement rocks and stayed in the basement, we don't know. If they came from the Athabasca and migrated down and mixed with basement fluids that were rich in uranium, well, even better. Then we've just got a better mechanism. But what we're seeing in this area, from our preliminary take, with the amount of alteration that we've seen, we think it's highly unlikely that it was just basement hosted. Like there was just that there weren't any Athabasca fluids. We do think that the Athabasca fluids did migrate and mingle into this massive structure.
This is, as you say, further up close to the basin because it is what's technically northeast of Accio, but because of how Accio is located, the more north you go on your own land package, not directly north, but the more north you go on your own land package, the closer you come to the basin edge. Is it because it is further into the basin, is there more sandstone covered?
Sorry, say that one again.
Is there more sandstone because it is closer to the basin edge?
No, we haven't seen any sandstone yet in that area with two drill holes.
Okay.
But we saw, when we drilled Accio, we saw sandstone immediately. And
what does that mean?
Again, what does that mean? Means that Accio again was a drawdown structure, the negative flower structure idea, that everything sunk down, went plop, 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 like that. And so the sandstone that was deposited there fell down with the faults. And it was at a lower elevation that when the glaciers came over, it saved that sandstone. This area doesn't, this new area that we've discovered doesn't have to be like that. It doesn't have to have sandstone, but whatever was on top before the glaciers came over, that's probably gone. If there was an area where the sandstone would have, if there's a fault mechanism that would have dropped down, yes, we can preserve sandstone in this area, but it doesn't have to be the case. And we don't need that type of structure to have mineralization.
Okay. It's funny when you called it a bop 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 discovery. Maybe that should be the official name there. But it's funny because you
Negative flower structure.
when you describe it like that and you look at a cross section of the pods on Accio, that's exactly what it looks like because they're very closely related to the faults, and it seems like they're lying kind of on top of it. So it's I mean it's almost as if they sunk down. Just looking at it right now, actually. There's also a mention of pegmatites with this new discovery here that I too suppose is similar to Accio, but is that are those pegment are you seeing or thinking that those pegmatites can be the source of the fluids that would then hopefully be uranium bearing, or are they more of a marker of those structural zones?
I think they're more of a marker. I don't think they are the host. I think they are the precipitation point. I think that's where the redox front occurred.
Okay.
Because that's where we are seeing the redox fronts within that pegmatite. We're not seeing them outside of the pegmatite in any of the alteration sequence. We're seeing it only within the pegmatite. So I think that a number of things. The structure that we've intersected up there, that 300-meter wide structure, I think that might have been too large to have mineralization within it, because being so large, fluids will just migrate through there. It'll be a constant fluid pathway. Whereas when you get off the major structure and you start getting into more of the damage zones or the subparallel structures, the fluid flows are not as strong or prevalent. And that's where that would induce or encourage fluids to slow down and start precipitating out.
Okay.
And if with the conditions, with the chemical conditions that are there to precipitate this redox front, that's obvious. Well, yeah, the conditions are obviously already there. But we think that the pegmatite is a marker, much like what I was saying at the beginning, how we've got orthogneiss, metasediments, pegmatite, orthogneiss. We think that pegmatite is a marker boundary between two favorable rock types. And typically those pegmatites are just old structures.
Okay. That's not.
Did the uranium come from the pegmatites? Yeah, I don't know. I don't think it did, because of the fracture controls. And again, just when you see that alteration, especially the upper part of the pegmatite's quartz rich. Quartz has no reason to have uranium in it, none whatsoever. Quartz is barren, doesn't like uranium being in it. And in the upper part of that pegmatite, we're seeing quartz and hematite, basically it. And it's that hematite that's altered whatever was there. It's that hematite that was carried in. That is the radioactive part of it. So I don't, and again, seeing when we see the higher radioactivity in the structures, that again, it's those hematite structures where we don't see elsewhere within that pegmatite, those discrete, clear-cut hematite veins that are coming in that are really radioactive. So we believe that it is this fluid system, this hematite-rich fluid system, that has carried uranium into the area.
Okay. Quartz sounds kind of like my wife's ears. It doesn't like having uranium in it. What I've written down to ask you about lithology and stratigraphy here relative to Accio. I guess we kind of brushed upon it when we were talking about sandstone there, but are there any major differences in terms of stratigraphically or lithologically, or I don't know, I'm basically guessing at this point, but are there any major differences between Accio and this new discovery?
None yet. Geologically, yes. We have some bizarre rock types at Accio, things that we call mafics or calc-silicates, just because they're very rich in calcium magnesium. We haven't seen those up in this new area. But again, that calcium magnesium interplay with these bizarre rock types is I've never seen those on a deposit before. So Accio is unique in itself, whereas where what we're seeing up in this new zone is more like what I've seen in the past in other deposits. Just with that simple stratigraphy idea, with the structures controlling the things, the hematite flows. I think that's more akin to the typical Athabasca style of deposits that I've seen.
Okay. How does all of this, understanding this, and it's kind of, I like the change of James, who talks about corporate stuff, and James, who talks about geology. It's two different Jameses, and this one's way more excited, so I like him.
I love
But
geology. I'm a
how
geologist,
does
damn it.
how does this change? How does this scientific understanding or better understanding that you're gaining with the years of this land package, how does that change your corporate structure from the perspective of, or what I mean here specifically is, would you want to drill this one out first and include it into your MRE, or do you want to have an MRE on Accio out first and then include that later on?
MRE on Accio first, and then include this later on.
Okay. So does
The Yeah, so we do have two. I'll kind of explain it with this way. We've got two drills on hook right now. One's drilling Accio continuously, the other one's doing exploration. We're looking for additional discoveries. If we make another discovery with the exploration drill as it is, I would feel compelled to take the drill off of Accio and put it up to this northeast area while this other drill drills a new discovery to build up. We've kind of internally talked about a hub and spoke idea that we can have a number of deposits and just be centralized around one certain area, which so far seems to be Accio. But until we hit, if we hit something outrageously high grade and with the scintillometers going screaming off scale, we'd probably take all the drills and just put it on that area. And that's what we're looking for. We can't control the amount of radioactivity we find, which is why we always have to find more. But if we hit something like that, a off-scale radioactivity, yeah, we'd go there in a heartbeat, because grade makes these deposits go very quickly. Like grade is king, but again, in the end, it's always the economics that are going to play more of a factor.
Yeah.
And
Okay.
with everything we're looking for, the Athabasca 2.0 model to me has the best advantage for finding an economic deposit.
Does any of this influence your relationship with your neighbors to the north? I think 92's GMZ is to the north, right, of Accio.
Yep, adjacent to it. Yep.
It's where I mean, yeah.
I don't think it does influence I don't think it influences them at all.
So what you found here, the new radioactivity, that's not going to be related to GMZ at all. I mean, it's too far away or something.
Much too far away.
Okay. What are you going to call it?
Fortunately enough, all of the geophysical anomalies in this new area are completely within our project. So if it does grow into something big, it looks like it would be hosted completely on our side, which is what we needed.
Yes, I agree. What are you going to call it?
No idea yet. We're open to suggestions, though.
Okay, yeah. Let's make a CTA, call to action. Make people send you emails with potential names. Who's gonna call it? I know Cameron has got good ideas.
Yeah. We've come up with a few. Again, Accio was based on the first letter of the Discovery crew, the first initial of the Discovery crew. So we can keep with a theme like that. Would be a pretty big name this year because we've got a larger crew out there. But I don't know. We'll come up with something.
But who was it? Was it who drilled that hole? Was it Cameron?
Yes, yeah.
The new one, not Accio.
Yep.
Okay.
Yeah.
Good. You can call it McAccio. That'd be fun.
Yeah.
Something like that. I'm thinking. I'll come up with names. I'll get back to you. This kind of you kind of answer that. Well, partially you answer the question that I had, but balance, right? How do you manage the balance between more work on this new discovery, with more work on Accio itself, and then with more work on Catharsis and Bear? Like, are you looking to the market to see what you should be doing, or is it more scientifically? How do you balance that many targets that you have here?
Well, if I look to the market to gauge what we should be doing, I should just pack everything up and walk away right now, but I'm not going to do that. I'm not going to listen to the market on that.
Hmm.
Yeah, it's really more about, well, especially for Baron Catharsis, was a lot about exploring as many targets as we could and keeping a lot of that ground in good standing. But by testing the amount of targets, I guess that was the same with Hook too. We've tested a number of targets on Hook and we'll continue to do so. And it's really trying to take us from a larger scope of view that we've got target here, target here, target here, target here, and tons of targets. On all of our projects, we've got over 100 drill hole targets. It is absolutely crazy. So we're trying to really minimize that. We're trying to really focus on where we should be going next. And we prioritize the ones with the better results. Catharsis ranks very high. The DG in Catharsis ranks very high. The Bear to the west of where we've drilled ranks very high. We've got that new discovery in Hook that ranks very high now. It actually ranks the highest that we have to go back to, and which is why I said we're going back to it no matter what by the end of this year. And then we've got a few more. We've got another target that we're just currently drilling. Same type of alteration, probably a larger halo, but it's on the mother fault south of Accio. Just oh, when you can pick up core in your hand and just squeeze it and it all crumbles because it's so clay altered, and you get meters and meters, and you get hundreds of meters of nothing but alteration, clay alteration, redox fronts in your drill hole. You're onto a good fluid system.
Hmm.
And so we're seeing that now as well in along this mother fault that runs down to an area that I've been wanting to drill for the last couple of years, and we're almost there. But we're seeing a lot of potential in other areas for additional mineralization. So it will be, in the end, it'll come down to what do we think is going to provide the best results to get our share price moving again, to get investors back into the company.
That's where I was going with this, because this is the James I like seeing, the excited James. It kind of started off a little bit, down at the beginning because we were talking about the share price, which has sucked, but now we're talking about the good stuff that you're discovering and you're getting excited. But, I'm still holding and trusting your vision on this one. Not much else I can do at this point. But what can you do to get the market as excited as you are? I mean, what are you doing in terms of promotion? Is there really any sense in putting money into marketing, given the overall condition of the junior market today?
We haven't really been marketing too hard this year.
Hmm.
We've trimmed a lot of marketing fat off this year as a whole. Maybe that's the reason why we're not performing as well. I don't think it is, because in a lot of marketing we've done in previous years, we've always seen negative ROI. And having a share price that has been crushed since 2022, it's always been on the downfall. So marketing really hasn't helped us. We think results are the only way to get this going, and that is the big push. We will go back to marketing, yes. Again, with something like this, once we have more comprehensive um, facts behind us, with assays and everything, and based on everything that we've drilled. I put together a presentation for Catharsis, and I was told not to put it out just because it was after the fact. Even though it was really encouraging and everybody who's seen it loves it, and that's our board and internal geos. They think it's really exciting and it shows the potential that exists on Catharsis, but the timing isn't right because we're not going back to Catharsis until next year. So there's no point in trying to promote something that we're not going to see for months on end. So we keep all of the focus right now on Hook, on Accio, coming out with good results from both. And then towards the end of the year, yes, we summarize everything, say, hey, this is why we're excited about next year, which we have funds to go back and drill. And we will. Yeah, it's a I'm looking to get marketing again. I get more into European and Asian space, looking for long-term investors who are notably more long-term, as we can't have investors who aren't going to just who are going to sell out on the first bit of bad news in the marketplace, or not ride with us. We're looking for people who want to ride with us because we have a vision. I haven't sold any shares because I have a vision and I want to see that go through. And the more pounds we discover, I think the better off we are.
James, this has been a good overview. I think I've been through most of my questions. I'm getting a very, very good, well, as good as I could get understanding of this new discovery, but we've been through a lot. What am I forgetting to ask you? What should I be asking here at the end?
I have no idea. I think we discovered a lot. We discovered the market. We looked at the drilling, what's coming. Yeah, we've still got a lot of drilling to go. And hopefully we'll have a whopper result in the future. Fingers crossed. But yeah, we've made one new discovery already. And we'll be happy to get back there by the end of the year. And I think it'll grow into something. That those sizes don't go to nowhere.
This what next news release then is going to be, as you said, what end of August, mid-September is the assay results from this new discovery. That's the first next news release you're going to have, or is there something in between as well?
No idea. No idea. There might be something in between. Again, with a lot of Accio drilling that we're doing, just trying to finish up all of the drill holes to bring that into a resource indicated resource category. We're seeing good stuff out of there. Market hasn't really appreciated previous results. Maybe they don't appreciate radioactivity. So should we release radioactivity or just wait for the assays? And I'm thinking that we just wait for the assays, unfortunately, for a lot of investors and people waiting on. But we announced that we were drilling 16,000 meters at Hook at Accio, and we sold down. There was a pretty big drop in our share price. We announced a new discovery. We were sold down again. So it's good news is coming out, but it's not being well received. So it's just a game of patience on our end then again until I guess we get some assays out to try to encourage people to come back to the market for us.
All right, James. Well, I'll let you do your thing now. Thank you, though. Thank you for sitting down with me. This was not an easy conversation. I know for you, for nobody really. It's not easy looking at the share price either. I'll let you drop off now, though. I don't have any questions anymore. Hopefully, we'll catch up in a couple of months again and see what you've been up to. But for now, I will be going even further north than northern Saskatchewan, which you'd be surprised. Yes, there is something northern than North Saskatchewan. It's actually northwest, I suppose. I'm not gonna try and be funny. I'm going to Alaska in particular because apparently there's a lot of nickel up there, and I'll be doing a geology deep dive, and I'll be getting kind of a master class on nickel geology from Greg Basher and Gabe Graff, respectively, the CEO and chief geoscientist at Alaska Energy Metals, are hopefully going to be helping me do a geo deep dive. The company's listed as AEMC on the TSX Ventures Exchange in Canada, where an average of about 1.2 million shares trade each day after a recent spike in volume, with a 52-week high of 82 cents and a 52-week low of 13 cents. There's a market cap of about $30 million and about 113 million shares outstanding, making this a 27-cent stock today. I'm not doing a full company overview since I already did one about a month ago when I had Greg and newly appointed director Tyron Breitenbach on for an AEMC deep dive. So I'll make sure to list that video somewhere for people who might have missed it. They should watch it. And the point of today's conversation really is, though, to get a better understanding of the regional geology around the Nikolai project and the potential for the land package as a whole. So, Greg, I suppose I'll kick it off with you and very broadly, too, by asking you, what happened? How did everything get there? Sort of from a regional geology description of the area point of view, and of course, specifically how it relates to the deposit Alaska Energy Metals is now sitting on. And feel free to take me way back, by talking to me about tectonic processes that have shaped the region and how they've influenced the styles of mineralization that we see on your project today.
Yeah, sure thing. And so you can see on your screen here, Antonio, a map of Alaska. My home is here in Anchorage, Alaska, on the Pacific coast. And, we live in a very tectonically active area. There's earthquakes here all the time, particularly here along the Alaska Peninsula. You can see a volcano right there. There's a whole series of volcanoes along this peninsula and out the Aleutian Islands. And the reason for this is that the Pacific Plate is pushing to the northwest against the North American plate. So here's Alaska, Yukon is here, British Columbia is over here, all very mountainous regions where the Pacific Plate is colliding with the North American plate. But in our case, the Pacific Plate is moving more or less northwest, being subducted beneath Alaska. And this process has been going on for millions of years, hundreds of millions of years, really. And so layer after layer of rock has been pushed up successively rather, into Alaska. And it's still going on today. The rock is being subducted below, and that's pushing these rocks up, and then there's volcanoes, magma coming up through, pushing forward to surface as this plate gets subducted. And so this has happened for so long that there's just belt after belt after belt of rock preserved in Alaska. This is just the most recent rock belt that's being accreted onto Alaska, onto the Alaska portion of the North American plate. So here you can see our Nikolai project. And one thing I find quite interesting is this, you can see this arc here. This is a major fault, the Denali fault. It's very active even today, comes close to our project site. And I find it quite interesting that the mineralization at our Nikolai project is right at the apex of that, what I would call a homocline. It's one big arc. And I don't know why, maybe it's created the open space needed for large volumes of magma to come to surface. And that indeed is what has happened in the Nikolai area. Huge volumes of basaltic magma came up through the crust and eventually spewed out on the surface of the earth as basalt, subaerial or above water basalt flows. So in a nutshell, that's the history of Alaska geology and how Nikolai got where it is. But I can jump to another slide that will show a cross-section, a vertical slice through the earth that will let us zoom in a bit and show you the processes I've mentioned. Any questions so far, though?
Well, you can talk to me about the whether this is characterized by any specific terrains. It sounds like it's going to be what, volcanics or cratonics or prisms or whatever else. What does it what does it look like?
Yes, it's dominantly volcanic terrains, but also sedimentary. So you can imagine even right here, we've got an arc building. It's an accretionary terrain, so there's some oceanic crust pushed up. There's volcanic rock coming up through it with actual active volcanoes here. But then there's sediment spilling down the continental margin here. And so eventually that all gets pushed up. And so it's a combination of magmatic, volcanic, and sedimentary rocks that have been metamorphosed. We have a lot of schists in Alaska, and so the heat and pressure has altered, in many cases, the character of the original volcanic, magmatic, and sedimentary rocks.
Okay. Yeah, go ahead and go ahead to the next slide that you wanted to show me, but also maybe you can talk to me about potential similarities in the tectonic history of your deposit in the same history of other significant nickel deposits. I think that's an important topic to get to as well.
Absolutely. And I think this slide does a really good job of it. So what you're looking at here in this colored thing is sort of an idealized or cartoon slice through through the earth, the vertical slice. And the purple colors indicate magmatic rock, along with the red. The green indicates volcanic rocks, and gray is sedimentary rocks. And you can look at the scale here, about 30,000 feet or 10 kilometers of Earth's crust. So this is a thick cross section that goes from way down 10 kilometers below surface. And so this is the very roots of the magmatic system coming up through, conduits or conoliths, we call them, leading up then to this great big bowl-shaped layered mafic, ultramafic intrusion. This would be about 35 kilometers in length. And as you can see, roughly 3,000 meters of vertical thickness to this huge bowl of rocks that were molten, but that slowly cooled in place. Series after series of intrusions would have come in here, but that magma would have kept pushing further up and eventually formed volcanic rocks below the ocean, or even right up and volcanoes spewing out lava on the surface of the earth. And this is a huge volume of molten material that would have spewed out. I mean, you can see there's probably, another 2 or 3 kilometers of lava that got built up over millions of years back in the Triassic period. And so what's really important for formation of nickel deposits is having that enormous volume of magma passing through the system. It's ultramafic to mafic magma, which has sulfides disseminate or dissolved within that molten magma. So the green here would have been pre-existing crust. It's solidified rock. This is solidified sedimentary rock, more solidified lava. Pre-existing when this molten magma came intruding in, and it's carrying dissolved nickel and copper, and in the form of dissolved or as little tiny droplets of molten sulfide. And you can imagine in that magma, when 2 little molten droplets of sulfide touch each other, they want to stay together. And then another one will touch. And so over time, as magma passes by and those droplets of molten sulfide can touch each other, the mass grows so that more and more molten nickel sulfide will glom onto each other and accumulate. And so little traps like here where, for example, the conduit flattened out. If there was droplets of sulfide and that were accumulating, they might start to settle towards the bottom of this magmatic chamber. And remember, though, it's pulse after pulse of magma coming in, bringing those droplets of sulfide. And so over millions of years, that magma is mixing, the droplets of sulfide touch each other, settle a little bit, and can accumulate. So these conduits and the traps within the conduits can be excellent places to find massive sulfide. The droplets have all accumulated, forming a big deposit of molten nickel sulfide, which eventually cools over time to become solid, cooled, massive sulfide. So here's this huge layered ultramafic intrusion. Pulse after pulse of magma came in. But you can imagine the base of this large chamber would be a very good place to look for nickel sulfides, where they would accumulate. Those droplets could accumulate at the bottom. But in our case, a little bit off the bottom by several hundred meters, we have discovered this zone of disseminated nickel sulfide. So it's not massive sulfide, but there's numerous little tiny grains of nickel sulfide disseminated throughout a very large volume of rock here in what we call the Eureka complex, this great big long mafic ultramafic complex. And so one other necessary component of this model is that there has to be a source of sulfur for the nickel to mate with. Nickel metal will naturally combine very easily with sulfur. And in these sedimentary rocks, remember, these are pre-existing sedimentary rocks that are lithified, or they've turned to rock, being intruded by molten magma. But there's layers within these sediments that are very pyritic. So they have iron sulfide layered in them in various places. And so you can imagine when this molten rock magma comes in contact with pyritic preformed sedimentary rocks, there's a strong reaction and assimilation of the pre-existing rock into the magma. And so it's a source of sulfur. And that's an important part of the model. You have to have the nickel dissolved in the magma, but you have to encounter, that magma has to encounter a source of sulfur for the nickel to combine with. And we've got that documented here. The other thing that is very, very interesting and gives us a strong indication that there is a big nickel deposit or series of nickel deposits in this plumbing system is that these basalts, these flood basalts, so again, this purple colored magma flowed up and then made it all the way to surface for over 10 kilometers of distance over millions of years and pumped out on surface as basaltic magma. Well, basalt naturally has a couple of hundred parts per million nickel in it, almost all the time. If you find the common rock basalt, it's almost always got 200 parts per million nickel in it. But in this area above the Eureka complex, we've documented that there is no natural abundance of nickel in the basalt. Somehow, the nickel has been stripped away before this magma spewed out on surface and solidified into basalt. And it's interesting to note that at the Norilsk deposits in Russia, this exact same phenomenon has been documented. The basalts, the flood basalts, the Siberian trap flood basalts, which would be the equivalent of the Nikolai basalts, are devoid of their natural abundance of nickel. And at Norilsk in Russia, down below, there's incredible deposits of massive nickel sulfide that have been preserved. And Norilsk, that region, a series of deposits and mines, probably the largest single accumulation of nickel metal on Earth. And that general geologic setting is why we first started to explore here way back in the 1990s. And so this is a project that Alaska Energy Metals has recently picked up, and we're revisiting all this and searching for those massive sulfides. But in our search, we found this tremendously large disseminated nickel sulfide layer that's within the Eureka complex. So that was a big, long story, but if you'd like to jump in with questions, I'm glad.
Yes, sir. So in what I'm thinking about, and we would have to go back to the top layer here, but that's topography. Why I'm thinking about topography and what these processes have resulted in, what type of topography, is because I know it's going to be important for the potential strip ratio here. We'll talk to me about the topography here at the Nikolai project.
Right. Well, one thing to understand first, I think, would be, okay, think about it. This is a vertical slice through the earth. We're 30,000 feet below surface when hundreds of millions of years ago, this magma started to pump up. Or maybe 10,000 meters, 10 kilometers below surface. But what's happened is that through tectonic processes, this whole cross-section is being tilted on its side, and thrust faulting has occurred, pushing the roots of the system all the way up to surface. And so I'm going to show you a geological map next. So here's the Eureka complex. And so just to jump back and forth, here's the Eureka layered mafic, ultramafic complex, over 30 kilometers in width. And so, whoops, what you're looking at is this big bowl-shaped Eureka complex, layered mafic, ultramafic intrusion. And remember, below that are these conduits that lead up to this big bowl. And here's the big bowl, and here's the conduits. Even though these were, 10 kilometers below surface, here's the lowest roots. This magma, shown in purple, was at one time 10 kilometers below surface. But the whole thing that I show in cartoon view as vertical has been tipped on its side and thrust up to surface. So this is the deepest roots of the system, and you can roughly trace up through the conduits, finally up into this great big bowl. And remember, then the magma carried on, kept pushing up, and got up to surface and spewed out on the surface of the earth in the form of flood basalt. And so if you were to look from bottom to top, this is the bottom, this is the top. And in cartoon view, this is the bottom where the magma started to come up, eventually pushed all the way up, forming this huge province of flood basalt at surface. And that's what we document through geologic mapping here at the Nikolai project. Our claim block is here, centered on the Eureka layered ultramafic complex. And this claim block here, which would occupy this area, the very deepest roots of the system. And some of our competitors have staked claims over what would be these conduit areas. And that would be these conduits, the Rainy complex and the Ice complex leading up into the Eureka complex. These are also good places to be exploring for nickel sulfides. And in retrospect, we would have been better to have acquired the mineral rights over these two conduits when we had the chance, but we didn't have enough money and we missed our chance. But it's good to have a little competition sometimes too.
What does that result in terms of potential strip ratio here? And why I'm asking this is because I believe some historic papers had shown potential challenges relating to the strip ratio. Does that have anything to do with any specific topographical features at all, or anything that you talked to me about here so far?
Yeah, so let's zoom in further. This black outline is about a 4 kilometer long conceptual pit, which I'd mentioned in our last talk. And within that is this disseminated nickel sulfide mineralization. And now I'm going to show you a smaller cross section. This is a map view, by the way. Now I'm going to show you a cross section, a vertical slice through the earth along this line A to A prime. And that will demonstrate the strip ratio aspect. So again, here is the conceptual pit that would be excavated over a series of decades, really. It's about 600 meters from the surface of the earth. This is a vertical slice through the earth. Here is the surface of the earth. The yellow represents just a little skim of glacial overburden. The pink and red and yellow colors represent the sulfide mineralization in the rock. The purple pink colors are stronger concentration of metals, but you can see that the metal, the mineralization comes almost to surface. It's just hidden beneath a few meters of glacial loose overburden. And so when we talk about strip ratio, that means what is the amount of waste rock that would have to be removed, mined, to get at the valuable ore. And so you can imagine after 3 decades of mining, we would have this pit that's 600 meters maximum depth from surface. And this here is waste rock. There is no nickel mineralization, or not enough nickel mineralization in this rock here, this prism of rock. And so to make the pit, we would of necessity have to remove that rock to get at this mineralized rock. And so after 30 years of mining, the ratio would be about 1.5 waste tons to 1 ton of ore. But
that doesn't sound too bad. I thought it would be more than 5 or something that I'd read somewhere.
No, because this deposit dips perfectly at about 45 degrees from the horizontal. That means we don't have to remove any waste rock on the lower or footwall side of the deposit, but we do have to remove this rock from the hanging wall. But it's important to keep in mind that's after decades that we have to start making the pit this big. For the first decade, perhaps, the pit would start right here, quite shallow, maybe only 50 meters deep, and we wouldn't have to remove any waste rock to get at that ore. And then later, maybe a decade in, we would have a pit that's 200 meters deep. Still, we haven't had to remove any waste rock. It's only as the mine gets older and older would we have to start moving waste rock. And, in these big deposits, the economics rely on paying back the capital quickly. And so if our costs are low because we don't have to move waste, then that's very helpful to the economic project, the economics of the project.
Okay. When are you gonna know, or when are you gonna be able to put that in how should I say it, sort of in perspective? That's not the right word that I want to use here, though. I'm thinking, just again the strip ratio. When you have the 2024 MRE, I'm kind of lost at words here because I'm thinking about this. But so you have the 2024 MRE. When you go to a PEA, that's when you're going to have this strip ratio outlined as a 1.5, basically.
That's right.
Okay.
It'll be roughly in that area, but you can imagine that, we wouldn't necessarily have to include this entire deposit in our initial PEA or preliminary economic assessment. This area over here seems to have lower concentration of nickel. And so we might elect to do a smaller pit for our economic analysis just hearsay where we know that the concentration of metals is higher. You can
Okay.
see the pink and purple. That's higher grade. That's up above 0.3 or 0.35% nickel equivalent. And so we could base our initial 10 or 15 years of mining on this higher grade material. A smaller project. We don't necessarily have to propose a project that will last for decades and decades because of the time value of money. You know, after 15 or 20 years, it starts to not matter that much to the project economic analysis. You know, I mean, it's good to know it's there. It's good to know that the mine life could be measured in multiple decades. You know, major mining companies love these style of deposits because they know that once that capital is paid back, that they can operate profitably for long periods of time and know very well how much money they're going to make each year, depending on metal prices. So that's how we'll do it. But I think our next step is to further extend this known higher grade mineralization. And we're almost certain that it keeps going. We've got surface samples here that tell us that that higher grade zone keeps going. We've got historical drill holes that tell us that the deposit continues to the southeast. So we need to keep drilling that off and define the very highest grade mineralization and base our economic studies on that highest grade portion of the deposit.
Okay. Can you go back?
And a
go
couple
ahead. Yeah.
points, Antonio, on, you know, you were talking like a 5-to-1 strip ratio. I believe that's roughly what it was in our maiden resource when it was 2 pits and we didn't have the mineralization defined enough. So it was actually mining waste rock that was ore, but because of the drill hole spacing wasn't close enough, it was designed as, or it was designated as waste, but it really was ore. And then when we put out this new mineral resource estimate that connected those 2 deposits, all that waste material was ore, and now it's been defined, which really brought the strip ratio down.
Okay. Yeah.
And then a second point here, when you look at this slide here, do remember, so the deposit is dipping, north would be up. The deposit is dipping 45 degrees off to the southwest. So the block model you're looking at there is just looking at roughly like the top of the deposit, you know, the upper Eureka zone, because of the way it dips. So if you flip to the next slide, Greg, that's where you can really see, you know, how the deposit is, where it's got that real core high grade zone that continues for most of the deposit. But in that plan map, you don't really see it because you're only looking at the flat surface of the contact on the upper Eureka zone.
Okay. What about, can you go to the, now that you're mentioning this, Gabe, I'm thinking about I think you brushed upon it, Greg, before this, but the structural controls and what are, just so you can remind me of the main structural features that control the mineral deposition here.
Again, the overarching structural controls, I think, are this big arc, and that the pressure that as the plate goes off pushes to the northwest underneath the North American plate created open space or lower stress, which allowed these conduits to form so that the magma could push through into the crust and then eventually up to surface. So to me, that's the overarching regional tectonic reason that we have so much magma pushing through the crust, spewing out onto surface here millions of years ago. And why the nickel deposit, the Eureka deposit, is where it is within Alaska. But then structurally after that, it was important that, as I mentioned, that these deepest roots of the system where, you know, this magma cooled below surface, 10 kilometers below surface, but through tectonic processes, everything got tipped up on its side and then thrust to surface, so that the 10-kilometer deep a portion of the conduit is now exposed here on our Canwell block, and the other conduits are exposed here, then the Eureka layered complex, and then eventually up into the Nikolai flood basalt. So were it not for the thrust faulting that's occurred over millions of years as the Pacific plate pushed towards the northwest, accreting this terrain, that's what's allowed these rocks to now be exposed at surface where geologists could find them.
Yeah, I think it's important to, differentiate. Greg's talking about the whole tectonics and how the structural fabric works. It's not like a typical gold deposit where you have faults and quartz are coming through faults veins, and quartz veins are coming through the faults and you're getting gold mineralization. This is actually a magmatic process that's forming the nickel deposit. It's not a hydrothermal process or a structural process. It's part of the magmatic fluids, coming in through these conduits.
Okay. Why I'm asking about the structural controls or going back to them is because I'm thinking about whether there are any major structural traps or some other feature that is making for a larger concentration of the minerals in one spot.
Yeah, potentially. As I mentioned, these bends in the conduits can be excellent places for massive nickel sulfide to accumulate. And for a sudden bend to occur like that would happen because of some structural preconditioning of the existing sedimentary bedrock. Or maybe they're in this, remember, gray is pre-existing sedimentary rock. And so maybe there was some weaker structural layer within that sedimentary package that allowed this magma, shown in purple, to come up, maybe some sort of a fault structure, but then to move laterally through the sediments. So this could be a really good spot because remember, if that hot molten magma comes in contact with pre-existing sulfur sources, pyritic sediments, for example, there's fireworks when that happens. That sulfur is interacting with the molten magma, and that's when really great metal deposits can form.
All right, and where I'm going with that question, asking whether there's concentration, is because the mineralization or the thing that makes up your MRE is divided into 3 zones, I believe. So it's with varying thicknesses and grades. They're not exactly the same zones. How did that happen? And could that also be a challenge down the road once potentially into production, given that there are different zones where they formed in different ways? Talk to me about that.
Yeah, sure. So we'll have to zoom in closer. But so remember, we've got this, it's like a cloud of disseminated sulfides here, a few hundred meters up into the Eureka complex. And we're going to zoom in again just on our deposit. So now we're zooming in to this Eureka complex. And then we're going to zoom in further to the Eureka deposit. So map view, there's the pit. Here's where we have this big zone of disseminated sulfide. And then finally, here's the deposit. And this is thick. That's about 300 meters thick, true width, measured perpendicular across the deposit. And you'll see UEZ, CEZ, LEZ. That's upper Eureka zone, central Eureka zone, lower Eureka zone. And this is zones that Gabe has established based primarily on nickel concentration. The concentration is higher in CEZ2 than the upper or the lower, but there could be underlying geologic reasons for that. And Gabe, as chief geoscientist, is leading a team to see if they can figure out the reason for that zonation.
Yeah, and some of the initial results we're getting back from some of our mineralogy work we're doing is that core Eureka zone is more of a dunitic rock, and the outsides, the upper Eureka zone and lower Eureka zone, are more of peridotite rocks or whorlites. So we got to dive into that a little bit more, and figure out the geology, of the lithologies of the different zones and see if that holds true, and try to determine why that core Eureka zone, being a dunitic rock, has, higher grades than the rest of it.
Oh, so they would be different stratigraphically too, then.
Potentially, they could be separate intrusions, or it could be one large intrusion that just the center was hotter and it's cooling slower and it's forming more olivines or something.
Right.
Some different geological processes happen in that core where you're agglomerating more sulfides and stuff in that core because it took longer to cool. That's kind of stuff we're working through right now with some of our whole rock geochemistry data and the mineralogy that we're doing with SGS and Lakefield.
Okay. So did you what I'm thinking about here, why I asked that way for them being three different pods, is because I'm thinking about the risk of inconsistencies or discontinuity in the resource estimate, especially as you're moving toward the more serious studies like a PEA and then a PFS and so on. Is that how are you managing that risk of inconsistencies or, again, discontinuities?
Well, at this point, there's no reason to, Antonio. We're just barely wrapping our arms around this deposit. We've established an initial resource, but we know that it keeps going off to the northwest and off to the southeast. And for now, we only need to drill a hole every 300 meters to establish an inferred resource. It's a very homogeneous, very consistent style of mineralization without much variability, really. And so for now, we just want to find out how big this deposit is and where the higher grade is. But once we've done that, then we'll start to drill on closer spacings, do infill drilling first at 150 meter centers, and then probably half that again at 75 meter spacings. To really understand the mineralization and any variability within it. But like I say, so far, it's a very homogeneous type of deposit. We see changes across the deposit, as Gabe's described, lower grade on the footwall and on the hanging wall with a higher grade core. So there's variability in that direction. But along strike, we're not seeing a huge amount of variability, but we are seeing better grade here. That's the center portion, but we know it keeps going, and we've really got to figure that out.
Are you seeing variation in the alteration types, though? And do specific alteration types correlate with some of the higher grade?
Do you want to cover that one, Gabe? I mean, in these style of deposits, Antonio, there's not really alteration. It's not like hydrothermal fluids, such as in a gold deposit, come up through, react with the wall rocks, altering their geochemical character and depositing gold. No, this was molten magma deposited or pulsing through pre-existing crust for millions of years, pulse after pulse after pulse of molten magma that eventually, when the magma stopped flowing, slowly lithified or turned into rock. And so we don't see big alteration zones like one sees around gold deposits or porphyry copper deposits. The process of formation is quite different.
Yeah, I mean, one thing we do see is a serpentinization of the rocks, and that's from the metamorphic and hydration process from being buried in the ground. And essentially what that does, during serpentinization is you start to form serpentine minerals. You could have brucite, you could have talc, you could have nickel iron alloys. Magnetite is a big one that forms, during that serpentinization process. So kind of from some of the initial mineralogy stuff we're seeing, it does look like the upper zone is a little bit more serpentinized than the core and the lower zone. But as of right now, that's kind of the only real kind of alteration, that we're seeing within the deposit is that serpentinization. So definitely in that upper zone, and that's probably because it's closer to that contact with the pyroxenites and the gabbros, and there was more places for fluids to flow to serpentinize the rock. That's really the only real difference in kind of the alterations I would say we've seen between the different zones right now.
Does that mean anything in terms of your, in terms of the potential for copper mineralization there too, though? Because I assume there would have to be alteration and more fluid involved in it if there would be significant amounts of copper. Is that not the case?
Not for copper. I mean, copper is going to be magmatic in origin, so the copper would have been with the nickel when the when the magma was coming in. So the copper and the nickel would have been in the magma already. One thing with the serpentinization that you could be forming that could be valuable could be magnetite. Do you have some kind of iron product out of it as well? Brucite. If you talk about CO2 sequestration, brucite is a good mineral for carbon sequestration. But no, the nickel, copper, cobalt, PGEs, all that would have been originally within the magmatic fluids itself.
Oh, okay. Right. So it is really only when you're talking about precious metals. That makes sense. Good.
Yeah.
What's the, you're mentioning the lithological variations earlier here, Gabe, but what is the variation in mineralogy like? Are there any unique textures or mineral associations that are typical for this type of deposits?
Yeah, so I mean, the rock is pretty heavily serpentinized, so you destroy a lot of the original minerals and textures when you're looking at them in hand sample, but when you get them under the microscope, in the upper zone, we're talking about a whorlite, so it's mostly composed of dunite crystals, but there's also pyroxene crystals in it. So that's where we're definitely able to tell when we're logging the upper Eureka zone, we can see pyroxene minerals in it. Whereas when you get into the core, those pyroxene minerals completely go away. And then as you get into that lower zone again, you can start to see the pyroxene minerals again forming. So there's some process that we need to dive deeper in to figure out why that core is, more dunitic than the rest of the rocks surrounding it.
Does that make it challenging from a Pathfinder element perspective, though? Because oftentimes you'd see in these news releases, companies talk about, oh, we found Pathfinders, and that's going to help us zone in and stuff like that. Is it? Do you have that with this?
That's not an issue here. I mean, there isn't much for Pathfinders if you're sampling nickel on surface and you got your ultramafic rocks. That's kind of how the deposit was originally found in with Greg's team in the 90s, and then pure nickel following up in 2010. There isn't much for Pathfinders outside of it. It's what's inside of the magma is what's important.
I think the Pathfinders were good when we were sampling soil at surface in the initial prospecting phases before nickel was even discovered. That's how we did discover this deposit. Is we did soil sampling on a grid style pattern. As you know, ions of the metals below make it up into the soil above a deposit, and it was a very large nickel in soil anomaly, but there was the Pathfinders of copper and cobalt and other metals that gave us the clue that, okay, there's some metals in the ground, and that's a very common association, of course, copper, cobalt, and nickel.
Right. Why I'm asking about Pathfinders, because I'm thinking about depth. As far as I understand it, you're open at depth. Is there a way for the Pathfinders to tell you how deep this may go?
Antonio, maybe it's best to think of this as vectors. We want to find higher grade. And so if we can find something that points us to higher grade, that's an important clue that can really help the project. Right now, we've got these vectors where we know that the center part is higher grade. But you can imagine if we were to drill up here and then get better grade as we drilled here, and then better grade as we drill deeper, that's a vector in the down dip direction. Yep. But we haven't seen that yet. We see that the center part is higher grade, but everywhere that we drill through the center part, it's about the same concentration. So we don't have too many vectors pointing us, except that we do know there's that higher grade portion of the center. We do know it keeps going. And so we're going to follow it off to the southeast by drilling more holes in the southeast direction. But if along that strike, all of a sudden we started to get higher and higher grade, that'd be a very good vector that we would definitely follow up.
Is there variation vertically in the geochem as well that might also help you find that higher grade?
Um,
I mean, not that we've noticed to date. Maybe some more drilling would definitely help, resolve that issue. But as of right now, no, we haven't seen anything that's helping us vector, except for, like Greg pointed out, this higher grade core looks like it's getting better to the southeast. Greg, do you have a slide with the surface samples and kind of where the planned drilling is going to be for 2024 in the slide you're on? Yeah, right here's a good one. This one will work good. So you can see again, now we're looking at the plan map here, and you can see that higher grade core there, that's coming across. And then the two yellow holes are the holes we wanted to drill right there. And then right there, the two holes we want to drill this year. And then A to A prime, if you pop up onto that section in your top right there, you can see A to A prime and one of the planned drill holes.
That's right.
The best surface samples that we have on this part of the property are right below that drill hole, where you're getting almost 1% nickel, 0.2% copper, 1.5 grams of, palladium, which is 1.25% nickel equivalent instead of, 0.35 nickel equivalent that we're seeing over in the core Eureka zone there. So the question becomes, is this higher grade core we're starting to see, will that continue out and blow out to the southeast, and you'll start seeing higher grade nickel numbers like we're seeing in those surface samples? And that would be the goal of our 2024 drilling, is to test that.
Okay. And that's just drilling. I mean, you don't have to do anything else, any major work before that. You can just go ahead and drill it.
Yep.
No,
We know. Go ahead,
the
Greg.
one great thing about this project is, my team in the late 90s had done 5 years of intensive exploration work before Inco, my employer at the time, walked away, and then another company came along, did 10 or 12 years more of great work. But we have all that information. We purchased it last year. So all the surface geochemistry, the geophysical surveys, all these things that cost millions and millions of dollars has already been done. And there's not too much left to do except drill on this project.
And metallurgy, I suppose, too, though.
Yeah.
Yep.
So it's that move, now that we have an established resource, we're moving into a different realm where, okay, well, how much of the metal is recoverable? It's going to be extremely important to know this.
What is the metallurgical composition of what you're going to potentially have to separate, and how challenging do you think it's going to be recovering that nickel?
Who knows? I mean, we've only done the very earliest work, and we're just starting to do the very first metal recovery rate testing. We do know the mineralogy, and so we do know that a lot of the nickel is in the form of pentlandite, a common nickel sulfide mineral that's readily recoverable by standard flotation milling methods. But what we don't know yet, and what we'll have to show, and what will take a lot of experimentation, is, well, how much of the copper comes with the nickel? How much of the platinum and palladium partitions with the nickel? What about iron and chromium? Can we make an iron chromium product that is valuable before we even recover nickel? So just so many questions to answer in that realm, Antonia, and we're just barely getting started on it.
Yeah, and I think one of the important parts you touched on there, Greg, was, on this, mineral resource estimate we have here, it doesn't include any chrome or iron, which have pretty significant values within the deposit itself. But we don't really know if we can make a product out of chrome and iron. So we need to do some metallurgical testing first to see what kind of, iron and chrome we're going to get out. And is that something that somebody can use downstream and be sold to somebody or not?
Well, what about comparisons? Like, what recovery rates are typically or reasonably to be expected a year for the nickel and the copper, I suppose, specifically is what maybe there are good examples of.
Yeah, I think Canada Nickel's Crawford deposit in Canada, Ontario, is a good analogy for ours. The mineralogy is fairly similar. they've ended up at around 53%, is it, Gabe, in terms of the recovery rate. So that means a lot of the nickel is not being recovered. A lot is lost, and that's sort of typical of these bulk tonnage, lower grade deposits. But I think, with experimentation over time, that the recovery rates of their deposit and ours would be optimized and maximized. I know that Anglo American made a big investment into Canada Nickel. They're a very experienced mining company, mineral processing company, and they've got their own proprietary techniques that go way beyond any bench scale testing. And I think they may have even stated publicly at one point they're confident that they at Canada Nickel's deposit could get the recoveries substantially higher. But it's a very important question to answer because it has a big determination on the economics of the project. The more you recover, the better, but it's quite a sensitive variable in the economic analysis. At least it was for Canada Nickel. 5% either way could make or break the economic situation of the project. So, yeah, very important that we gain this information. It's going to take a couple of years to do all the testing we'll need to do, even just to get the initial results, and then it's optimizing afterwards.
What else is important for the economic viability of the project, of course, is the composition of that equivalent grade, because we're talking nickel equivalent grades here, right? And so if I pull up that slide on your presentation that says at North American peer comparison, it says, and you're in the top of that range. You're 0.29 nickel equivalent grade. So
Right.
is Canada Nickel's Crawford. Dumont is the same grade as you. Well, Canada Nickel's actually lower grade than you. But it's well, yeah. The question is those deposits that you're comparing yourself to, is it the same nickel equivalent composition? Is it the same percentage of copper versus nickel?
Yeah, no, they're not all the same is the short answer. And so in our nickel equivalency calculation, platinum and palladium metals have a pretty strong contribution to that equivalency. And so it's really important that we know where the platinum and palladium go when a sulfide concentrate is formed. So, the bench scale testing will use flotation to separate the nickel sulfide. Well, how much of the copper sulfide will end up in that dominantly nickel concentrate? How much of the cobalt? And what about the platinum and palladium? And so, yeah, we don't know, but it will be a strong determinant, I think, on project economics.
Yeah, and then besides the flotation as well, we're also doing magnetic separation, for the iron, chrome, and nickel iron alloys and other things. So how much, sulfide is going to end up in that magnetic concentrate as well. Then you got to regrind that to send it back through flotation to refloat it to get more of the nickel and copper. So it's a pretty in-depth process to try to figure out exactly what's going where and then how do you optimize it to get it where you want it to go.
There's another difference too that it would be interesting to see what comes out of the Gabe. What is it, this year you're going to have news on that?
Should be, I would think by the end of the year, we should be getting some results on that, that network.
Right. There's another difference, obviously, between all these projects, and I know that's not technically about the geology, but it's about the setting in which the rocks live. So what I mean by that is the environmental and social permitting regime. That's different for these jurisdictions. Well, how's that where you're at in Alaska?
Yeah. And for example, to compare to Canada Nickel's Crawford deposit, I mean, they're in an excellent place in Timmins, Ontario, Canada. It's a long established mining camp, gold mining, polymetallic deposits. It's got the infrastructure. It's got hydropower, electric power right there. It's got a railway very close by, highways, trained workforce that's accustomed to mining. It's a mining town, and so permitting should be relatively easy for them. couldn't be in a better spot as far as I'm concerned. We're in a pretty darn good spot here in Alaska. We're near existing highways. Electrical grid electric is maybe 50 kilometers away from us or more, maybe a bit more. The railway is probably 100 kilometers to the west. So yeah, it's by no means Timmins, Ontario. And so our economic hurdle will definitely be higher than Canada nickels. And that's a good thing that we've got higher grade. And I think important that we further delineate that higher grade core zone that we know we have, because we know we're going to need something a little bit better than Canada nickel has.
Okay. How many so far though you're permitted for all the work that you want to do this year? There's no more permits to get indigenous communities or whoever else?
No. So we have a 5-year exploration permit. And that's readily renewed for the exploration drilling that we're doing. You can see from the highway here that there's a gravel road that leads almost to the deposit. We need to extend it by several kilometers, and we need to upgrade it and take some of the curves out of it, reroute it a little bit. So we'll have to do first some baseline studies and then apply for permits to do that. But that's certainly our intention in the next couple of years, is to establish ground access for the infill drilling that we would do on the Eureka deposit. But then after that, I mean, we're still 3 to 4 years away, realistically, maybe less on an accelerated time scale if money was no object. But it's still probably 3 to 4 years away from the point where we actually have a mine design and make the initial applications to permit actual construction of a mine. So we're a ways away from that, but I don't see any deal breaker ecological concerns. There's nothing really special about this place. Like, for example, salmon is always a big concern in Alaska. You know, we have tremendous runs of salmon that come from the ocean up the big rivers to the small rivers to the creeks and spawn. The fish spawn in the creeks, but there's no salmon on our Eureka project, and none for that matter for many, many kilometers downstream. There's a natural obstruction that prevents those salmon from coming all the way up to our project area. So we don't have that sensitivity that is present in other places. And so I don't see anything that, you know, will end up being highly controversial from a permitting standpoint. In Alaska, native land claims are long resolved, and there's no native owned land in the immediate area, but you know, the native corporations of Alaska own subsidiary companies that can provide services to our project. Even now that we're starting baseline environmental studies, they have companies that do this work. They have civil engineering and dirt work construction companies that could design and build our roadways. So it makes only good sense that we do business with our native Alaska corporations.
Looking at those snow caps, if you will, to the northeast and to the northwest there, it reminds me that exploring or working in Alaska is it reminds me of my assumption that exploring or working in Alaska is a seasonal business. Is it?
It is in the early stages that we're in now. You know, just to maximize the dollars, we stick to the summer months. But as the project advances, once we start to move into definition drilling, where we're grid drilling the deposit to get more and more information, then we certainly stretch that season out. We establish full road access, a camp right beside the deposit, and we can operate year round if necessary. Yeah, it gets cold in the winter. The conditions are challenging, but it's nothing we can't do. All the mines operating in Alaska operate year round, 365 days a year.
Would any of that increase your OPEX though, or anything really that we've talked about so far today? Would it make it so that you have higher OPEX than some of these comparisons that you have here on your presentation?
No, I don't think so. Like, I mean, if you were to compare to the Timmins area of Ontario, for example, it's pretty darn cold in the winter there too. In fact, the average temperatures in the winter are probably the same here at Eureka as they would be in Timmins, Ontario. So that's not going to significantly increase operating costs. No.
No, I mean, having that road access would actually likely reduce the cost getting away from the helicopter utilization, because the
Oh, for sure.
helicopter utilization is expensive. So once you got your road access in there, it's pickup trucks and, drill rigs that can go on roads to get out there. And then you got rid of that helicopter, so I think your drill costs actually go down once that happens.
Oh, for sure.
What is maybe a silly question actually, because there's 1,000 variables or even more. But what is typical OPEX range for these type of deposits?
I guess we have looked at that a little bit, Gabe, when we designed, when our contractor Stantec designed the pit and the cutoff grade, and what was the mining cost in that calculation? Do you recall?
I don't recall off the top of my head. I would have to go look for it.
Okay. What? No, I mean guesses or anything along those lines, like what? Yeah, guidelines. Like a range is also fine.
Yeah, probably in the $20 to $25 per ton range. Yeah.
Okay. That's nickel equivalent 0.3. Okay.
Yeah,
So,
I mean, the value of the gross metal value of the rock as it stands now is in the order of 60 to 65, I think. So,
well, that's at current spot prices, but I suppose you're also hoping for two things. Higher nickel prices would obviously always help, but you're also looking for higher grade.
correct.
Okay.
Yeah. Both will contribute, and both will probably be necessary.
Yeah.
Right.
So will recovery as well. How much can be recovered?
Yeah.
Correct. Yeah. Well, you do. That's what I was going to say. I mean, you manage what you can manage. You cannot manage the market gods. You manage recoveries and grades. So good. What am I?
But Antonio, oh, go ahead, Gabe. But
that's all gonna. The cost is all gonna come down to how much milling process, how many times you got to grind it. The grinding portion of the milling. That's what really eats up a lot of your electricity and costs a lot. The mining's. That probably will be pretty standard. But it's gonna be. Your milling costs. How much does it cost to mill it? That's gonna be the kind of the big cost that goes into actually recovering your metals. And then what do you do with it from there? Does it, do you smelt it? Do you a hydromet facility? There's a lot of options you got to look at.
Yeah.
That's way too early to talk about these things, I suppose.
Yeah,
it really is pretty early. Yeah.
Yeah, and we'll have a better idea, once we get this MET study back, and we know how much is recovered, what processes, then you can actually start tying dollar values to a flow sheet of, how much it's going to cost to mill this stuff and how much it's going to cost to mine it. Then you do your mining studies, and then that what rolls into the PEA that gets you to, is this economic or not?
Okay.
Yeah. But those are things that we can control. It takes a lot of testing and experimentation to optimize and determine all that, Antonio. So you're right. There's things we can control. They'll take time, a number of years, really. But there are things we can't control. But and one of them is the price of the metals. We've seen some pretty wide fluctuations already, even in the last few years, in not just nickel price, but platinum and palladium as well. But there's the overall notion. The main reason that we started to pursue this project again is that it's projected that there will be very, very strong demand for nickel as our society moves more and more electrified. Nickel is a big part of that, no matter what. But the other aspect is that high grade massive nickel sulfide deposits are very rare and difficult to find. And there's no way our mining industry is going to be able to run out and just find a whole bunch of high grade deposits. And so to meet demand, our industry will be forced to mine these bulk tonnage disseminated sulfide deposits. The concentration of metal is not that strong, but the economics rely on moving a large volume of rock and processing it, much like porphyry copper mines that exist all over the Pacific Rim, from the southern part of Chile to Alaska and back south to the Southeast Asian countries. That's how most of our copper is produced now. They're these bulk tonnage disseminated copper deposits, and nickel is just now moving to that direction where the demand for the metal is so strong that we will be mining these deposits.
Good. Well, gentlemen, I know you both have to go now. As it's become clear, I have no idea what I'm talking about when it comes down to geology or anything for that matter. What am I forgetting to ask you, though? What should we be talking about here that I'm failing to bring up?
No, I think those were excellent probing questions, Antonio. You've touched on all the major risks that are typically presented by these projects, from permittability, social license, to the intricate technical details of the metallurgy and metal recoveries. Each one is very, very important, but I believe you've touched on all the major things.
No, yeah, I agree. You definitely did a good job in diving into the geology, and we answered based on the information we have now, and things are evolving and going quick. So we'll definitely have some more news flow over the next coming months here with the mineralogy and met work that we're doing, and hopefully that'll be able to clarify some of these questions that you had that we can't answer for surely yet, because we don't have the data to really know those answers yet.
All right, gentlemen. Well, good. Well, I suppose I get that. I'm gonna have to rewatch this, to be fair, though, to make sense of all that's going on. But I'm getting a better handle on it. I appreciate you investing your time in me. I actually do. This was a great masterclass. Thank you for doing this. I'm gonna let you drop off now for now, though, at least, because I'm gonna be moving on and going to Quebec, where I'm gonna be looking for nickel, cobalt, and the other way around. So nickel, copper, and maybe even some cobalt. And I'll be getting some help from Frank Boscia, the CEO of Coniagas Battery Metals. The company is listed as COS, that be COS, on the TSX Ventures Exchange in Canada, where an average of about 14,000 shares trade each day, with a 52-week high of 27 cents and a 52-week low of 8 cents, actually. With a market cap of just about $3 million and 30 million shares outstanding. Today, this is a 9-cent stock. There are 15 million warrants that are striking at 40 cents, all of them, and there are no options outstanding, leaving the number of fully diluted shares at about 45 million. This is a spinco, though, so it got spun out of another company called Nord Precious Metals earlier this year. So it is I suppose technically a brand new company, but the majority of these warrants that I told you about are indeed held by the mother company and shareholders of the mother company, who combined also own close to 75% of Coniagas, of the shares outstanding of Coniagas as a whole, while management owns close to 10% as well. The last financial statement, which is dated March 31st, shows me a little over $500,000 in current assets, $150,000 of which it was in cash, and $120,000 was due from related parties, with prepaid expenses coming up to $300,000. Do note, however, that Coniagas is currently in the process of raising money, which is expected to bring in about $500,000 of cash into the company. And also just do note that finances can change over time. There's no long-term, or there was no long-term debt recorded for the first quarter of this year, which makes sense given that, again, it's a new company, and the account payables and accrued liabilities combined came in at just about $80,000. In terms of corporate expense, the same financial statement shows me that Coniagas spent about $40,000 per month on average on what I would call administrative expenses, with professional fees and marketing making up over half of that spent. This is where I typically provide the exploration to administration ratio, but given that, again, this is a relatively young company that just got spun out, the numbers from the first quarter of this year will not be wholly representative of that. So I hope Frank and I will be discussing budgets later on as well to give you a better idea of what that looks like. As always, also just please understand that this financial statement is nothing more than a snapshot in time, in this case, specifically at the end of March of this year, and it simply shows you what the finances looked like on that exact date, and nothing more. Finances, again, are fluid things. So, although I don't like admitting this to my wife, I can sometimes make mistakes. So by the time you're watching this, please head over to the company's website as well as setterplus.ca to look at all the numbers yourself and make sure you're getting the full picture. For Coniagas, the centerpiece of that full picture is, again, as I said, Quebec. It's the Saguenay, Lac Saint-Jean region of Quebec, to be in particular. So I guess that's what's that, southeastern Quebec, that is. And we're looking at 110 claims covering over 6,000 hectares, or 6,113 hectares, if you want to be specific about it, with historic and recent drilling showing the potential for a 30 to 60 million tons of nickel equivalent. And it's equivalent because, as I mentioned at the beginning, it's nickel copper with a little bit of cobalt as well. And well, actually, the name of the company is interesting because it is a compromise of the chemical symbols of the main metals they're focusing on. So that'd be Coniagas. So that would be, well, nickel's in there. There's silver in there. Arsenic's in there as well at the end, AS. Or at least that's how I assume it. So maybe something we'll talk about. But the grades so far that we've seen range between 0.6 and 0.8% nickel, and 0.3 and 0.5% copper. Whereas cobalt, again, the smaller portion of it all, is 0.10 to 0.15%. And this is based on historic rather than current drilling, though. As to the current work that's being done on the project, there's been a geophysical EM survey showing a rather long EM trend that was then confirmed to be mineralized by drilling, and it's counting up to 6 kilometers in strike length as of now. The Grau project, which is what the name of the project is characterized by a nickel-copper PGE, a northacitic hosted magmatic sulfide deposit. And these type of deposits are typically hosted in intrusive igneous rocks, predominantly composed of calcium-rich plagioclase feldspar. So why I'm telling you all of this, besides wanting to appear smarter than I really am, is because of two things. Number one, this means that the nickel at the Grau property is contained in sulfides again, right? Which is it's kind of a green check mark, if you will, on the metallurgical potential for the project. Of course, that will have to be proven by some met tests later on. But again, hopefully Frank and I can discuss that in our conversation. And second, these are typically close to surface, and that is the case for Coniagas too. And again, that's not just a thesis, because to date, Coniagas' own drilling shows highlights of over 1% nickel equivalent, which would, if you want to translate that to copper, would be 2.3% copper equivalent. And that was over 29 meters. So it was drilled at about 50 to 100 meters depth, again, 29 meters. And with the 16,000 meters they have drilled so far, multiple zones of massive and semi-massive sulfides are showing, where platinum and palladium could also be valuable byproducts, assuming that the metallurgy works, of course, which again, so hopefully something we can discuss later on. Exploration success is not the only thing Coniagas is aspiring for, though. They want to build a Quebec-based RE20X processing plant, which is, it probably doesn't tell you much right now, but it is intended or hoped to process potential ore from both the Grau project as well as offshore stockpiles. And so with that RE20X hydrometallurgical technology, why that's important and why I'm bringing it up is because it's a no smelting or no discharge operation. So we get to a final product without smelting, and there's no discharge to it either. And that's obviously thought to be much more environmentally friendly, which in combination with, well, this being in Quebec, so Quebec Hydro and cheap Quebec power has the potential to be even more environmentally friendly. And there are many opportunities here, but the listeners also have to understand that this is still very early days, and the plans I talked about are not risk-free, as nothing in life really is. More specifically, and so in summary, there will have to be infill drilling to increase the confidence level of what's in the ground and to potentially convert it into an MRE, as well as I mentioned, med test work is required, but that will of course require raising additional capital as well, and operational success as well, which actually brings me to my first question here, Frank. But and this is your first time on the CEO barbecue, so obligatory annoying questions here are in order. With the first one, and CEO's least favorite question really being, who are you and why should I trust you with my money?
I'm a metallurgical engineer by profession, and I've been in hydrometallurgy since 1982, worked all over the world. I put my money where I work or invest. For example, like Coniagas, when the IPO was done, the 850,000, 450,000 of that was actually our family money. We look at things a very long time frame, and most people who've been with me for a long time find out, good or bad times, they always make money. It's just we give a lot of dividends while other companies don't. So the other company was also a spin out from another distressed shell. So normally I take over distressed assets, distressed shells, and usually 18 to 36 months, we do about a 10 to 30-fold increase. Normally when markets are bad, and like we're experiencing now, I do these spinouts. The last spinout, when I did it, I gave everybody a share and a warrant over a 3-year time frame, and basically I gave out $16 million of dividends. We also ended up on what we call the V50. V50 is the top 50 venture stocks. So with 2 companies, we ended up twice up there. We're a very small team. We've been a virtual operator from day one. Nobody has a chair. Nobody has a desk. Nobody has a computer. We are driven, and our success is driven by our ability to generate results. So we grant a lot of options. And normally, for example, like Coniagas, a company starting like this, nobody gets paid. We haven't outlined or given any options yet. We're in the process of trying to do a very small financing and to kind of set the stage. And a lot of stuff you're seeing in our companies has actually been done somewhere else in another company we have. So basically, it's not like we're learning how to do it. It's already been done. So, we'll be talking, of course, about the read-to-ox process. That process was something I developed over a 6-year time frame. We spent $8 million to develop it. We went through multiple lab, two pilot plants, and then plant scale testing, and we produced product. And we also produced product in another one of our companies 6 years ago for the Asian market. We're able to meet on spec. So everything you see has actually been worked through, and we decided the time is right to create specifically a battery metal company. We chose Quebec because Quebec seems to be very nice to us about all these things. They're very pro resource development. They're very, very supportive. There's a group called Investment Quebec. Basically, they said, look, if you build here, we'll give you $500 million. So, and it's something that they've done. They've invested in other companies to over 100 million. So it's possible to do. So we also try to pick deposits that have a potential becoming very, very successful. We have a very good track record of finding things. And most people who invest with us, I'll just give you an example. And one of our companies we took over was Halted. And we bring in a lot of people, our marketing people. We do not pay them. They do what we call check swaps. One group made $2 million in 18 months, and the other group made $7 million in 18 months. So if the markets are right and the story is good, we make a lot of money for a lot of people.
The typical follow-up here for me would be, are you trusting yourself and your family with your own money? You're kind of noting that where you say, I put my money where my mouth is. How much of your own capital and maybe your family's capital have you invested in Coniagas so far? And also more importantly, how important is that to you? Because I mean, if you tell me I put in 100,000 or whatever it might be, that's a lot of money to me, obviously, but is that a lot of money to you? So talk to me about that.
Well, the thing is that I always find people like to invest with you when they see you have a large position in a company. We never exceed 10% in the way we do it in our structure. We're also, you'll never see us sell. The reason we never sell is because we always give dividends. So it's kind of a cascading effect. It does quite well. So if you're long term, if you're a day trader, don't bother investing. You'll be disappointed. Long term, you make a lot of money with us, and it's very high risk. In the reality, the junior market is always a high risk market, and so we try to minimize the risk by, of course, dividends and looking at long time horizons. We try to work in safe jurisdictions, and of course, the people, the way our people work, they're motivated by results, and when they get results, they make a lot of money on their options. So options I do sell, shares I never sell. And I'm just like everybody else. Everybody's part of our equation. We meet once a week before Zoom calls. We just had conference calls. We're fairly structured. We're not like other people that meet at offices and that. So any money we raise goes in the ground. Nobody has a luxury car in our company. It's just that we have a lot of pickups. And the reason we have pickups is because if you hit a moose with a pickup, you'll survive. And we usually buy what we call demos. So we get the full warranty. And of course, nobody has luxurious pickup. They're just simple work pickups. So a very simple company, very straightforward. We also run a forum. It's a kind of a private forum. There's a lot of these people on these bull boards saying all kinds of wonderful things. The reality, some of these guys say, why don't you ask Frank on Crucible? And they get an answer from me 24/7. Wherever I am in the world, I'll answer them and I'll tell them as it is, and good or bad or ugly. But the reality is, it's best that you get something that is truthful and meaningful.
So the 10% insider ownership that I meant, management ownership that I mentioned here, did you get that as a spin out? Is that money you've put into the company? And also going forward, when it comes down to financings, are you going to keep putting money in the company?
Yeah. The thing is, what we do is we try to maintain a certain position in a company and a certain degree of confidence for ourselves and the other people who invest. And then you'll see, we never sell them. Again, it's kind of, people don't understand why we don't do that. When you look at the long term, we make pretty good money. Some of the dividends we create are kind of unique. In one of our other companies, we created a gold-based dividend as a shareholder. You'll be converting your common shares to preferred shares. And then, of course, you get paid in gold once that dividend is delivered, if you wish gold, or you get currency of choice. But we structure these things, and some of them take, like this thing took us 4.8 years to get done, and about $650,000 in legal bills to get it done. So more than likely, there's going to be some sort of dividend coming out of this, which we based on the metals we produce. I think the opportunity here, early stage, is quite good. Like you have to think long term. If you're thinking short term, it's better you don't invest with us, because there's a lot of companies out there, and I've invested in these companies earlier in my life. There are a lot of hype, and then they last for 3-4 months, then they crash, and then they stay there. So we don't do that. Like I said, we have a tendency of toughening it out. And we like to go to what we call production, or make in the event we actually design our assets to be taken over. It's a simple thing. There are no employees. I'm a contractor. Everybody's a contractor. So it's a very simple thing. Somebody knocks on our door, we just give them the keys, and off we go to another project. So it's if you're going to be motivated to come to work for us for a salary, don't show up. You got to be here to make everybody win, basically, our shareholders, and your major portion of your compensation will be options.
Well, but and that's really a balance there, because obviously shareholders don't want you to overpay yourself or the team, but we do want the teams that we invest in to be incentivized, right? So how do you incentivize within the companies? How do you? I mean, for the G&A for Coniagas seems low, as I mentioned, at about $40,000 per month on average for the first quarter of this year. So maybe this is where you'd like to keep the G&A for the foreseeable future or not. Maybe you can talk to me about that as well. But yeah, how do you incentivize your team in that case?
Well, the main thing is everybody does have a base salary. but that's about it, and it's nothing to be all excited about. But when you come in, you know that up front, you're just getting a base salary, right? There's no bonuses. It's all option driven. And the reality is, if you look back at our history, how some people have made money. So what would you rather have, a wonderful salary, or would you like to have something that gives you options whereby you can make millions in a time frame of 18 months?
Hmm.
It's up to them, right? It's one of these things. You come in, you work. It's one of those 24/7. Our people are all over the place. We're not in one place like an office in Montreal or Toronto or anything like that. And like I said, it works. A lot of these people work from home. They're good with that. And they're, like I said, everybody knows what we're doing in our company. Like we meet on a Friday. Right now by Zoom calls at 1 o'clock. So everybody knows what we're doing. Good times, bad times. We manage to pull through. And that's how people make money with us. You gotta be driven. Nobody's gonna be looking over your shoulder in our company. You gotta be driven. And we have a good track record of finding things. If you look at some of our other companies, what we found, really wonderful, right?
You're also currently the CEO of the mother company that spun out Coniagas, and I think being CEO of one company is too much, although to me almost everything is too much. But how do you manage your time? I mean, what percentage of your time would you guess goes into Coniagas versus Nord Precious Metals?
Well, the reason we did this, we're going to kind of restructure a lot of our assets, and one of them will be probably spun out as a private company to the benefit of the current shareholders. It's kind of a tax thing. It seems to be far better doing that than trying to keep it as a public company. The other two, I think, Nord, we have a fellow there. I call him our dream team, a gentleman by the name of Matt Halliday. You look at our drill results there. I don't think nobody found anything like. And I used to work for Agnico in the cobalt camp. We never found anything like that. So him and his people basically found silver only. We don't do no silver equivalents there. Up to 89,000 grams a ton. They're narrow widths, but when you think about it, and when I worked for Agnico, they used to pour 1.6 million ounces of silver. Very small group of people, very small mill. And when you look at from where they are now, going back, they're like a $40 billion company, but they had a very simple model. And if you use that simple model, you can take any company and create a multi-billion-dollar company. But it's designed to be lean. It's designed to be a people meet on a regular basis. And it's designed to be kind of what I call in the field. Too many mining companies that I visit and I invest in, they have a wonderful head office. Why? That doesn't find resources, and then it's just a place to visit. The reality, I'd rather have the people visit in the field, find something. You're not going to find something behind a screen sitting at the desk in Toronto or Montreal or somewhere else in the world. If you're not in the field, you're not going to find anything.
I feel seen. I do most of my work behind the desk. It's a little bit different though, but once I decide to become a
but you couldn't do it in the field in the nature of work. But the reality of exploration, where do you do exploration? In the field. You're not going to do it in your office, right? You think about it, it's you look at some of our stuff and how we sample. We don't go take a little bucket. We take a 45-ton machine and we sample with that. And one of our companies, they said, well, we took a grab. Yeah, it's 500 tons. We did that twice. So we have a tendency of doing things, and then at least the numbers mean something. There's a certain degree of confidence that, yeah, we've done something. So, for example, Coniagas, the reason we chose that location, it's infrastructure. Critical thing is people don't understand infrastructure. If you don't have a road, and if you don't have power, if you don't have people there, these flying operations, beautiful grades. Problem is, never go into production. So this is a nice location. And Coniagas, the benefit of this, we've got some pretty crazy grades in our drill program. Like we did 17,000 meters of drilling in the other company, and we spent $6 million. And all we're looking at that time was strike length. So our strike length is about 6 kilometers. We didn't find the whole length, but the real value is this deep zone they call Graal, which is Grail. And it might be these super wide widths of massive sulfide. So if that is that, and if the current infrastructure in Canada or Quebec cannot treat our ore, and you look at where we're located, we'll take it to port and ship it to Europe or wherever it can go in the world, and produce products. In other words, what we're trying to do, shorten the time frame going from drill hole to production, because most people will spend maybe 5-10 years developing the resource, and then they'll spend a few years doing environmental permitting. So basically it could go anywhere from 12 years, 16 years before you're in production. We did that to another one of our properties. We kind of drilled it, got our permits right away, and designed it to be a shipper. But nobody wanted to take a rock in Quebec, so now we're looking further abroad. And I think we found a way of getting around it. But the point is, get your thing to market. Coniagas is being designed in what we call real time. So if you look at some of our news releases, you wonder, why are these guys doing this? For example, the market needs these metals. You look at, a Wood Mackenzie study. Basically, they're saying 2030 shortfalls, 167% for cobalt, copper, 85%, nickel, 65%. So, it's there. So in other words, in 6 years' time, nobody can build a mine. If you go from drill hole to a mine, and then of course you produce a concentrate, where are you going to send it? Smelters basically are all full. They're all tapped out. Where are you going to send it in Canada? There's nowhere in Canada to take the product. So you'd have to look at further afar, further from Canada. So we look at stuff right now in the DRC. We've been there since 2017, and we're very cautious. We take a lot of time to see what's really happening. We talk to everybody, and you'll notice now they invited us to meet with them in September in the DRC. But we're not buying. We're just doing what we call toll milling, toll leaching. In other words, we're just a tool, and we produce a product on spec. We're pretty good at producing product on spec. We've done that for Sumitomo in Japan 6 years ago. It's the process is called read-to-ox. I know you said read 20x is read-to-ox. Read-to-ox means it's a simple, elegant process, high sophistication, low tech. Now, the reason it was designed like this, basically, you can build this process anywhere in the world, and within 3 to 6 months, you can train anybody to run it. And, the technical people can watch this process on a laptop anywhere in the world and make the process work. So it's a very, very elemental process. Like I said, we spent $8 million over 6 years building this process. It's not something that, some people decide to, let's do this. And we did a few tests in the lab. So you'll notice all the work's been done with SGS. SGS is kind of a top shelf firm. And when they produce results, the results are really there. So kind of a unique thing in Coniagas. So we call it real time and also real feed. Now, what we're trying to do is tap into what we call the feed streams at these battery plants. In Canada, or especially Quebec, in Ontario, there's 3 plants in Ontario, which is interesting. Volkswagen is building a battery plant. They don't even make cars in Canada, but they're building a battery plant. And there's 2 plants in Quebec. And I was surprised to hear, and we met some of the people that produce cobalt and nickel in Canada. None of these people are supplying the battery plants. Why would you supply? So basically, their understanding is, well, we don't have any to supply. So where are they going to get their product? If you look on a global scale, you notice the product more than likely will come from China, more than likely it will come from the DRC. So, a lot of these electric cars you see being driven around, some portion of that car has cobalt from the DRC. So what we've done here in the DRC, we reached out to everybody. And, we've talked to the informals. And the informals are people that work the land. And they offered us 29 million tons of wonderful copper cobalt material, which they've hand cobbed over decades. And nobody wanted to take it. So we said, sure, we'll look at it, but we're not buying it. We'll treat it for you. And so they liked that structure whereby they felt that they finally got market value for the product versus what people would say, okay, it's only worth this and we're not giving you any more. So that turned out quite well. And then we also found a lot of concentrates that nobody wants to take because these are oxide concentrates. And if it's an oxide concentrate, there's no sulfur. Smelters need sulfur as an energy unit. So we found this stuff all over, and people out of Zug, the metal traders out of Zug, offered us quantities about 200 to 500 tons a month. So basically, we're in a situation whereby where do we build this plant? Investment Quebec actually found us a piece of property plus allocated power for us for this property, and up to $500,000, $500 million. We don't need $500 million. The Europeans, we met with the Swiss German just recently. They said, okay, we like to build a plant here in Europe. More than likely, it'll end up probably in Germany if it happens. And the people at DRC said the same thing. We want you here, and we can finance you through a group in the States. So, will it work? It's still early stages. We're operational people. We're being realistic about what can possibly happen. But what you need to do, what we do, is what we call real time. You can spend 6 years drilling this property and then try to go into production. You find out there's no smelter to take your feed, and then you find out nobody can buy your product because all the streams to these battery plants are already locked up. And usually when they do a deal, it's not something a year by year or month by month. It's like long term. So it's a different kind of company, a different kind of structure. It's not for what we call the faint of heart. It's one of these companies, when it really goes, it's hard to catch. If you look at some of my earlier companies, we've taken these distressed shells. The first one was kind of halted. The other one was trading like the parent of this company was trading at $0.015, 3 cents. We took it up to 88 cents. So we turned them around. Right now, all our companies are in a difficult situation like the rest of the market. And hopefully, as it turns around, we do what we do best. Make it good for everybody.
There's lots to touch upon there, Frank. And I am happy that I'm getting a better understanding of how the corporate situation works, what the corporate structure here is. Let's talk about corporate strategy and how you want to approach that from the exploration side to what do you think is a first and foremost unanswered question that you're dealing with right now? Like, what's the thing you need to answer with the drill bit?
Well, the thing is right now, first of all, we contract everything out. Even our geological people are contracted out. So it's a very effective way of controlling your funds or whatever. Our drill program, what we're trying to do right now is try to extend our 6-kilometer zone. We want to know how long that is. And then we'll go down deep drilling. Deep drilling is exceptionally expensive. A typical hole is $200,000 plus. And then we try to wedge off the hole to offset some of those costs. The program, this thing might end up being a lot longer than we expected, especially if the deep drilling does produce results. Like I said, deep drilling, really, really expensive. Normally our drill programs, our first company, we did 120,000 meters in about 18 months. The parent company, this one, we did 60,000 meters in a little over 12 months. So we drill pretty hard, and then the way we normally do it, we drill a little bit, raise money. We drill, we talk, and drive the stock. It's kind of a simple model. We spend a lot of time on the road. We do what we call a 6-week cycle. We do a lot of what we call meet and greet, and we do a lot of family offices throughout Europe, Canada, and the States, and it seems to work. Okay,
so for you now, it's proving up the continuity on that 6-kilometer EM trend that you've defined. How much drilling do you think you will be enough to get an answer to that question as to, is it continuous enough for us to go out and start talking about it?
Well, we have a very small program outlined here. It's kind of targeted at defining certain parameters we're looking at. The idea for us is a lot of majors are poking around in northern Quebec. 2 of them kind of said, what are you guys doing? So we tell them, invest with us, and then you'll know what we're doing, kind of. These are people that's all they do is basically base metals on a global scale. And Quebec is kind of unique in that way for many, many reasons. They're really what we call pro-mine development. Investment Quebec likes to help you with infrastructure, power, and whatever else is required to achieve your objective. So a lot of these big companies like to work in Quebec and speak French. You do quite well. Very, very supportive. You pick up the phone, you actually talk to somebody, and results, or sudden results as I call them, it just happens in Quebec. So I think the real success is some major will stumble upon us and say, look, we're interested in stepping in at this stage. we'd like to do something with you. And like I said, we're just give them the set of keys, give me paper for paper, and off we go, you know.
So how much, well, yeah, what does that mean for in terms of drilling? And what I'm really asking here, Frank, is trying to figure out how much money are you going to have to raise and then spend in order to do something that results in a higher stock price. That's what I'm at here.
Yeah, it's kind of hard to say, but you know, in our first company, we kind of spent 72 million, and we only explored 20% of the structure. We got multiple offers, which we declined. We try to pick out assets in an area where we know sooner or later somebody will knock on their door and take it over. The reality is, you know, people have deeper pockets, a larger skill set pool than we do. So we do all the legwork, put it together. The other company, we spent, I think, about 21 million in our parent company, still early stage, did about 16, like I said, 60,000 meters of drilling. And that's where we produce the cobalt sulfate for Sumitomo in Japan. What we found there, the structure was massive. We're trying to pick up the other companies in the area. When we came to the cobalt camp, nobody wanted anything there because nobody had ever had success there. We bought the property for $25,000. It was the highest grade mine Agnico had. And now you can't get a property in a cobalt camp under $5 million. The property adjoining me is now 5 million up to $23 million. And so we kind of created a high value to the whole cobalt camp. So this thing might happen here as well. I think we're in a good area. There's a lot of other people in my area. If you look at some very good success in our area, there's a company called Power Nickel. Basically, they have about 150, 170 million market cap. You look at our drill results that we got in 2022. We do what we call a meter percentage or meter cobalt, or I mean copper or nickel equivalent. You'll see our numbers are almost the same like theirs. So we have a simple 2, 3 million, 4 million market cap, and they have it over 100 million. So different type of deposits, but the area we're in is known for finding these very large, massive, high grade copper nickel kind of projects. Like I said, the 30 to 60 million tons was actually a study done by SOQUEM, which is a government agency in Quebec. And that does not include any of the drill results we have and the drill successes we've had. So, you know, it could be that the grades are higher or the tonnage higher, but it could be something fairly massive. And I think the 30, 60 million tons is very, very conservative. Of course, it's conservative because anything the government does anywhere in the world, they like to be very conservative. And SOQUEM is a government agency, a geological agency in Quebec, and they came up with this number in 2004. So we, like I said, we did 17,000 meters of drilling. You can look at our drill results. 2% is not actually our highest number. We actually have numbers up to 4% over reasonable width. What we call reasonable width is a mining width, and all we did was shallow. So what we do now is see, like I said, we'll extend it, and then we want to do some deep drilling. The deep drilling might be direct shipping. And if it is direct shipping, you'll notice where we are. We're close to port. Just put it on a ship and send it either to Europe or Asia or wherever it can go to get this thing into production, and then make a decision with Investment Quebec. Do you want the plant here? Yes or no? Or if the Europeans want it, yes or no? The Retrox process is a very, very elegant, sophisticated process. It's been tried and true and has met, on spec for end users. So it's kind of multiple things here going at the same time. A lot of people don't understand why we're doing this, but it's just we came from an operational background, and the key thing here is, we want to create what we call a turnkey asset. So if some major comes in, like a Rio Tinto, we're only doing maybe 5 to 10% of what really is of value there. They'll come in and finish the project off, and hopefully, like I said, they give us paper for paper, which is the ideal model for us. And we just walk away, and they bring in their team, their skill set, and their ability to finance these projects.
Well, the ability to finance these projects is where I actually wanted to take this as well, is because why I'm asking how much money it's going to cost is to be able to predict how much money you're going to have to raise. But talk to me about that again. As I mentioned, it.
Sorry. It's just like we do what we call a approach to it. So we raise a little bit of money, we drill, we talk, and we drive the stock. It's a simple model. So, as long as we, you have to give the investors steady news. You'll notice on some of our companies, it's basically every week or 2 weeks. And when we do it, we really push it. And you'll get probably news for 18 months to 36 months nonstop. And of course, as long as you do that, the stock will run up and down, but the overall trend is always up. So at the end of the day, like I said, we spent 72 million in one company for 20% exploration. Parent company to this, a little over 20 million. And like I said, some of that is also the 6 million we spent here at Grawl. So it's kind of a early stage, but some projects like this, you might have to do over 100,000 meters of drilling, or probably 1 million meters of drilling. But we're not going to take it to that level. It's not within, like we do the legwork for somebody to come in and do what they do best and put it into production. It's same with the plant,
What's your time frame expectation of doing that? Like, when do you think is the right time to start looking for someone who's going to come in and pay for that exploration?
Kind of interesting you asked. They actually asked us 2 weeks ago. So I think they're just too early stage. So I kind of said, like, we don't have anything to really offer, but they, oh, no, we want to see your data room. I said, very little information in the data room. So I was kind of surprised that 2 of them showed up. And very early stage. So I'm not certain if they have very large concerns of being able to meet this, the future needs. And like I said, cobalt by 2030, if you look at the Wood Mackenzie study, there's going to be a shortfall of 167%. And even at 10%, 0.1%, 0.15% cobalt, cobalt's a tough one. I remember when we dealt with the Chinese years ago, we were doing a presentation in Hong Kong, invited me to China. A few weeks later, we showed up and they said, "Why are you talking to us?" And he said, "Well, you have a lot of cobalt." And I said, "Yeah, but you're in the DRC." He says, "Well, we don't have enough." And cobalt's a tough one, really, really tough one, because cobalt also goes into other products, and people are not aware of it, but, it ends up in jet engines and ends up in all kinds of other products, which, they're actually taking it away from there and making batteries with it. And you listen to all these people, we're going to make batteries without any cobalt. It didn't work. They're not stable. So, they change the process chemistry, or the chemistry of a battery, whereby they're trying to replace the cobalt with nickel. So these lithium ion batteries, and I remember we were in Japan, we talked to Nissan, and they said, "Oh yeah, they're going to keep changing that." But the reality is the cobalt can't move, can't leave, has to stay in the lithium ion battery. And all these people talk, "Oh, we'll have an iron phosphate." Yeah, you can have an iron phosphate battery. They're not recyclable. So, these guys in this green economy, if you can't recycle your battery, it's not a part of the green economy. So the only ones you can recycle now and actually make a reasonable money on it is the lithium ion battery that has cobalt in it. Iron phosphate battery is not recyclable.
You're reminding me of something here, Frank, and that's that, as I mentioned at the beginning, you're dealing with a north acidic hosted magmatic sulfide deposit. They do often show significant grade variability between the different metals, though, and so I guess proving up continuity of the grade would also be part of your exploration strategy. But talk to me about that as well. Like, how do you look at grade variability given the style of deposit? And is that something your neighbors, like you mentioned, hard nickel, for example, is that something they have also had to deal with?
Yeah, the thing is, right now for us, I think it's still early stage to actually say too much about our deposit. 17,000 meters of drilling, people think that's a lot. No, not for a deposit like this. So we do it step by step. Says, okay, first let's see how big this thing is, how long is it, and then where is it close to surface. So we keep things very, very elemental before we get into these very detailed approaches. So I think saying anything now at this stage is really, really premature. And I think at the end of the day, the real value might be, we were surprised, we didn't report them, but we have some crazy platinum group element assays. They're not consistent. And we don't know why such high numbers showed up. A lot of them are over 1 gram per ton. Some are even higher than that. And we decided not to report them. We decided that until we get some what we call reproducibility or consistency, it might be just a one-hole wonder. So we were, like I said, we try to be fairly conservative in what we do. We don't want to create, some of these people drill a hole and build a mine. You look at some of the projects we do, like 60,000 meters is not very much drilling on a deposit, or even 120,000 meters of drilling. Right?
You are also doing met testing though this year, I believe. What exactly are you doing for met testing? What's the unanswered question on the met work?
Well, the met testing is basically to satisfy Investment Quebec. With Investment Quebec, even though all our work has been done at SGS, but it's been SGS Lakefield, which is Ontario, they want all our work to be on SGS in Quebec. So we agreed to that. And I says, you can go back to look at Lakefield. They said, no, we want everything done in Quebec. And based on the results in Quebec, which we feel SGS is pretty good at what they do, they will see what they want to see. And it's also conditional on them giving financing. And the financing is done in multiple stages. They have all kinds of stages to finance. And Quebec is unique in that way. It's not just they'll give you the big money for the plant, but they'll give you the money for, let's run a pilot plant, or let's go for marketing for your product through Europe or whatever. But Investment Quebec wants everything to be in Quebec, and they want a Quebec fingerprint on it, so to speak. So very supportive. Like I said, we do presentations all over the world. We're doing one in London years ago. Who shows up? Investment Quebec. We were in New York. Who shows up? Investment Quebec. We were in Ontario, meeting with South Koreans in Ontario, which is surprising. Investment Quebec showed up, and nobody from the province of Ontario was there. So Investment Quebec are very, very aggressive, supportive. I think they want to be the leaders, if not in Canada, probably North America, in this EV market.
Yep, PGE metals can also be a significant credit to nickel deposits of this type, if you figure out a way to separate them effectively and cost efficiently, that is. So will that be a focus for you, or are you chasing PGEs in any way?
Well, the read-to-aux process is actually, there's two. There's actually, the reason we say read-to-aux, there's actually two stages to it. One is designed for base metal recovery, and the other one is designed for precious metal recovery. This plant was originally, this process was originally based on a plant that was operated for about 65 years, and we modified it. We kind of took a very old plant and made it much more effective, much more efficient. So originally was designed just to recover a low-grade cobalt, nickel copper hydroxide, and we made that to produce at that time cobalt carbonate. And it was able to recover only silver, but we made it able to recover silver and gold as well. So it's a different chemistry, the two different stages. But right now, what we're only looking part of the read-to-aux is basically just the base metals. The base metal story is critical, I think. Of course, the battery market doesn't care about your precious metals, but the precious metals, the way it was designed, and when we did it in our other company, paid the bills. So in other words, if you'll notice, the Chinese kind of control the pricing on everything, and if they don't want you in business, they will not have you in business. But we can produce cobalt sulfate for $0. So in other words, we don't have to sell it. In other words, we'll stockpile it when you need it. You know where we are. We met with the Chinese 6 years ago. We produced cobalt sulfate for them. They came to us. They said, we'll give you 30% of market value. I said, you know where we are, and when you need it, we'll give it to you. But we're not going to give it to you at 30% market value, right? So it's one of these things. It's a tough market, but basically the way we design a lot of our stuff is the precious metals pay the bills. And then, if you guys want to fluctuate on the price of nickel, copper, cobalt, we're good with that as well, but we don't have to sell it to you. We have it. You want it? There it is.
Would it be challenging to permit, and I suppose generally, of course, but maybe we can split it into two parts, one being the processing plant and one the exploration work that you're hoping to do in that 6-kilometer EM trend. But talk to me about the standing of your relationship with the federal and the local government, as well as your relationship with the native population on and around your project.
Okay, so we worked with the First Nations over 30 years ago. We live up north, actually. We live in a little community in northern Ontario, which is about 500 kilometers north of Toronto. We've been working with the First Nations, and you know, if you've ever worked with them, they're the nicest people to work with. They're easy to work with. You know, they'll do a meeting at a coffee shop wearing a baseball hat and sweats and agree to a multi-million-dollar deal, and their word stays, you know. And the only thing with them, they have a different way of doing work or philosophy or whatever, you know. The earth is very important to them, or important to us as well, the way we look at it. They're very, what I wouldn't call them informal, but they're very, very, you know, personable people. They like to work on a personal level. So that's very, very important, because in reality, most people are not aware of it, but all of Canada actually still belongs to the First Nations, except small little areas around Quebec City. So basically, the land has never been ceded. In other words, it's still theirs. And when you look at it, the stuff they took away from these people, and they still are not bitter, which is kind of difficult for me to understand. And you know, you can pick up the phone, call them. There's a few occasions whereby, you know, if the weather's nice and they call the meeting and they're not there, and that's okay. You know, they're probably went hunting, or went fishing, or something like that, and we're good with that. You know, and but at least, you know, when you work with them, their word means something, and for us that's important. You know, and we structure some things which other people haven't seen. We make them part of us, or they're part of the whole equation, and we listen to them. You know, like for them, you know, they're interested in the quality of the water. You know, they're interested in their ability to hunt and fish. You know, for example, where we are at Grawl, the Cree up there asked, "Oh, you know, can you not be in this area of this property?" I said, "Sure." I said, "Why?" He said, "Oh, the caribou pass there once a year." I said, "Sure," and that's what we did. Right? Even though our property is huge, and we really don't have to give into that, but said, "You know what? They asked, we're good with it. We don't have to take everything there." You know, like the stuff we found is far enough away from the migration of the caribou, and you know what? I'm good with that. You know, so that's good. The provincial government Quebec is unbelievable. They're just you want something done, they're just, you know, we work in Quebec for quite a while, and Quebec is a no-nonsense approach to getting things done. Very, very supportive. Very supportive. I can't say enough about that. The federal government, kind of a lower profile. It's not a, you know, especially when it comes to permitting, depending on what you do and all that. They're kind of a low profile. They really don't, you know, they want to be green. You know, if you ever look at the Canadian government here, they want to be really green. They set some targets that are very challenging to meet. It can be done, but very, very challenging to meet. It's not just that the metals that we're looking at, but you need power to charge these cards. You know, it was kind of interesting. We do a lot of presentations, and actually we were in Zurich a little while ago, did a presentation. And normally when I do a presentation like this, I said, "Well, how many people have electric vehicles?" And only one person said, and I said, "What do you got?" "You got two of them." So I said, "Why don't the rest of you guys have them?" Because right now the cost to operate an electric vehicle is cheaper than to operate a fossil fuel vehicle. And he says, "Well, I don't have a charging station at home." So then a lot of guys said, "Yeah." I said, "We don't have charging stations at home. And how do you charge up your vehicle if you can't charge it at home?" So putting in this infrastructure will require a significant amount of not just copper and all this, but there'll be a requirement for other building materials to be able to do that. And there's a lot of stuff that has to still be done to achieve these objectives, but they're going in the right direction. You look at it, the operational costs for electric vehicles are, at first they're very, very high. Now they're getting way below their operational costs. And you look at the maintenance requirements is very, very low. You look at, you know, for example, Tesla. You know what? Here in Quebec, if you go for a drive, you don't see 10 Teslas. They have no shop or no garage or no dealership. You know, they need an upgrade. It's sent through them through the internet. You know, they don't need an oil change. Their batteries, you know, everybody's, "Oh, they have a short life." No, we found out some of their batteries can last 27 years. And then they have a second life as a storage battery for some windmill or solar farm. So high quality batteries, long life. So, you know, you look at these things, you know, I think it's going the right way.
Yeah.
And
I know.
it's got to go that way too, you know.
But so just to clarify, permits wise, you have everything that you need in order to
Yeah,
get that work done.
the permit wise, I'll tell you right now, I can get permits easier anywhere else in the world. Like, you know, we were in like I said, in the DRC, and I can get a permit there in 90 days. In Quebec, 2 years.
Okay. Yeah. But so to do that work that you want to do right now, the First Nations are fine with it, government's fine with it, you can go ahead and drill.
Yep.
Yeah. Okay.
Well, what we do is we preset the stage. Everything we do is preset long time ago. So everybody knows what we're doing way ahead of schedule. So in other words, we preset the stage, and if there's a fire in the area, see, normally what we try to do is we drill through the winter. By drilling through the winter, we don't have soil issues. You know, a lot of these things are, you know, when the ground's frozen, there's less damage to it when you're running equipment over it. You know, you go there in the spring, you go in the fall, and you know what? The damage you do is unbelievable. So winters are good. They freeze. The drillers like it. You know, anyways, when our people show up to drill, they do 24/7. Actually, you know, you talk about roasting or barbecuing the CEO. You see these guys drills, they have a barbecue on the drill. So they don't stop. They just go barbecue on the drill, and the drill keeps running, you know?
Yeah, Frank, I know you have to go now. You told me you have another meeting coming right up.
Yeah.
What am I forgetting to ask you? What should I be asking you that I'm not asking you here?
No, I think we covered a lot of things here. Basically, our company is very, very elemental. It's at the drill bit, at the face. Our success is basically the shareholder success. Our values are like the shareholders' value. If the stock like you said, we drill, we talk, we drive the stock. Basically, that's about it. You know.
That's Frank Pasha of Coniagas Battery Metals. That's COS on the Ventures Exchange in Canada. Frank, thank you so much for investing your time with me.
Always a pleasure. Thanks a lot.